investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest, and we've got a deal, at least in the House, on one big, beautiful bill. Isn't really moving these equity futures markets at all here. S&P futures down 0.1%, so really no move, even less of a move on NASDAQ futures. Russell 2000. Katie's not here, so I'm not even going to quote the Russell 2000. You hear the bell on the New York Stock Exchange. I would guess it's Hinge Health. I would have guessed Mountain rings the bell today. I think Mark Douglas is down there. I think Ryan Reynolds is down there. Mountain is doing its IPO today, but for some reason, it's a big green company ringing the bell. Down at the NASDAQ market site, there's so many sailors in town, and some of them have walked into the NASDAQ market site as well. So they're ringing the bell there with CSX, America's Navy, 250 years and going strong. In terms of the stocks that we're watching this morning, there are some big movers kind of under the hood. Shanali, come out here.
Sorry, but Hinge Health is going public too, just to say also. We just
thank you. I'm just so focused on Mountain.
With Mountain, and he's joining us later in the hour, so we got him first. I want to show you also what's going on with AT&T and Lumen, and it's IPO day. It's also an M&A day. AT&T buying the consumer business, fiber business, for nearly $6 billion of Lumens. The deal helps AT&T reach a goal of putting fiber optic lines in 60 million locations by 2030. And Lumen CEO Kate Johnson joins Open Interest later this hour.
That's very cool. So we really have IPOs covered with Mark. He's going to join us later, Mark Douglas. And then M&A covered with Kate Johnson from Lumen is going to join us later as well. We got AI making some moves here because Snowflake is up 11% on new AI products that it says are showing strong demand. The firm raising its full-year revenue forecast. We're also keeping an eye on the AI story that surrounds Apple in a way. OpenAI is buying the AI device startup co-founded by former Apple executive Johnny Ive. He is joining forces with Sam Altman to design some kind of newfangled super magic secret AI hardware. We don't know what it is, but it's interesting. The $6.5 billion deal is the largest in OpenAI's history, and the news sent shares of Apple lower because that's, I guess, competition. Mark Gurman joins us now. He covers all things consumer tech for us. And Mark, this is such a fascinating deal because they're going to come out with like a wand or an orb or some weird newfangled kind of hardware we've never seen before. Not a phone, not glasses. What is it?
Well, they are not saying what it is. I think the first product is going to be a home device. At some point, I expect them to follow up with a mobile device. But these are basically smart products specifically for tapping into ChatGPT. It's basically using ChatGPT as the new interface after the visual operating system. Now it's the speech-based operating system. And so I think this is something that at some point is going to become popular. Immediately, it's not going to jettison the iPhone or the MacBook. But at some point, this is going to become the future and make the future something of that time, of that current era, whenever it becomes popular. Now, you mentioned the Apple shares declining. I want to simplify it a little bit. So Johnny Ive left Apple in 2019, 6 years ago, right? He was the face of the company. He was the face of their hardware. In terms of the top two most important people at Apple, it was him and Tim Cook, and before that, it was him and Steve Jobs. He was known as Jobs' spiritual partner. They worked on everything together. They designed everything together. He leaves. Tim Cook pitches the idea to Wall Street because they were afraid, obviously, of Ive leaving, that Apple and Ive are going to work together. He made it as such that nothing's really going to change. He's just not a formal employee, right? Well, they ended up doing nothing together, and now he's working with the company that many people at Apple believe could ultimately put a pin in the iPhone.
Speaking of that, what replaces what in the future? I want to pull up this take by Josh Wolf, of course, venture capitalist a lot of people keep their eye on. He says that in his opinion, the Mag 7 just becomes MOG, Meta, OpenAI, and Google, which is a very unfortunate thing for stock investors at this current moment because OpenAI is not publicly traded. Mark, I mean, what is the potential here for OpenAI to really take out one of the big guys in the future with the ability to create real devices?
I think it's extremely high, honestly. I mean, Apple has well over 1 billion customers, so this is going to be a slow roll. They're not going to go anywhere in the next few years, but they're playing with fire here. If they don't find a way to catch up in artificial intelligence and make it a real core technology in the company, they're in big trouble. This is equivalent to 15 years ago if Samsung wasn't able to release a device with a touchscreen. AI is as core to the next wave of technology as the touchscreen has been to the last wave of technology. And don't forget, that's what the iPhone was. It was a touchscreen. The iPad, a touchscreen. Lots of computers are touchscreens. That's the equivalent here.
All right, Mark, it's a fantastic story. I recommend everybody reads it. I know I absorbed every single word you wrote and still have a million questions. So thanks very much for that scoop. Mark Gurman there on OpenAI essentially buying Johnny Ive and a whole bunch of former Apple employees. Now, Morgan Stanley is out, as we have been talking about, with its mid-year report and outlook. Strategists reiterated their 6,500 12-month target for the S&P 500, suggesting a better second half of 2025 for markets after the huge shock from Trump's trade strategy. Let's bring back Morgan Stanley's chief U.S. equity strategist and CIO, Mike Wilson. Mike, one of the drivers, I guess, on the upside could be a weaker dollar, right? We've seen the dollar just plummet year to date. I'm looking at the Bloomberg Dollar Index. It comes from 1320 down to 1220, so down 100 points. Does that fuel, you think, better revenues for U.S. companies?
It's definitely part of the storyline. I mean, it's one of the reasons we made this call about 6 weeks ago when the dollar was weaker. We said, you know, U.S. versus rest of the world is about to turn up because it affects revision breadth, which is the #1 driver of stocks. And we see that now in the data very clearly. It really started with Microsoft when they reported earnings. You know, they had a big upside beat, and that was driven, a lot of that was driven by currency, and that drove revisions. And so think about S&P 500. It's multinational companies. They get about 35% of revenues from overseas, and they know how to manage the currency situation. You always hear about currency when it's a headwind. They never talk about when it's a tailwind. But that has driven the revision breadth, and that's what models are picking up now. And if we just stay around these levels, that tailwind will persist into the second half. Our forecast for the dollar, by the way, in this mid-year update is for another 10% decline. So you think about in dollars. So if that continues into next year, okay, that's just going to provide another tailwind for 2026. It's just another reason why the S&P has a really hard time, you know, correcting more than 10%.
Isn't that rough for inflation? I mean, if we're already paying a tariff on all the stuff we buy from overseas, and a lot of the stuff we buy is from overseas, the dollar gets another 10% weaker, it just seems like that drives inflation higher and locks the Fed in place.
It definitely could. And I mean, the one to watch on that is commodities. And so I am encouraged by the fact that oil has been soft. Some of that's
good point.
Due to some of the things.
Jamie Dimon called that out as well.
100%. So yeah. You know, commodities are the big thing to watch in that regard. But remember this, Matt. You know, stocks do well when inflation is accelerating. It's a little known fact, okay? Because it drives earnings. In 2020 and 21 is when inflation really took off. Those are the two best years for the average stock. So just don't underestimate kind of like inflation can be bad for the consumer at the margin as long as it doesn't turn into a recession.
But I guess my question about the dollar is why would it drop another 10%? Now, I remember a conversation we had with Jane Fraser about a month ago, or really just a couple weeks ago back at Milken, this idea that the selling of U.S. assets has been a big problem here. Why wouldn't the same be true for stocks if you believe the dollar is going to fall?
Well, it's why it's falling, to your point. So if our call on 175 basis points of rate cuts next year proves to be true, you'll get a 10% decline. If it's only 100 basis points of cuts, it'll be less. But the direction of travel is south for the dollar, particularly against the yen, which they're not going to be cutting rates anytime soon, or against some of even the European currencies, or the currency, but also the pound, because they don't have as much room to cut in a slowdown.
Does Milken feel like years ago by now?
It feels like years. It feels like years ago. You know what also feels like years ago? The last time we saw NVIDIA up on the year, right? I mean, I'm sorry, it's crazy. I'm looking at the Magnificent Seven, and I do this every morning with Matt. I keep it on screen.
I like it. I like it.
7 p.m. I'm waiting for NVIDIA to turn positive on the year. It had for a minute, but that minute feels
You
like
use
a year ago.
BM7P. I like BM7T, but go
Total
on.
return. Fine, yes. I could agree with that. But you don't have a lot of the Mag 7 up on the year. In fact, you have pretty significant declines. And I'm wondering from your perspective, you were talking about Microsoft getting that gain from the dollar back, but what about everything else? I mean, at what point does the Mag 7 bring back the market, or are you counting on something else entirely?
Well, the Mag 7 is outperforming again. Even Tesla, I mean, is down a lot on the year, but it's had a really good run here for the last month and a half. And I think this all just comes back to the idea. If you're more uncertain about the future, generally speaking, what do you really want to own? Do you really want to own, in all these international things and things at higher volatility of earnings, or do you want to own the S&P 500, which has the lowest volatility of earnings? You now have a dollar tailwind, and you have an administration that's pushing on the gas pedal now as opposed to the brake pedal, and a Fed that's about to flip. I mean, that seems like a pretty constructive story over the next 6 months, notwithstanding that we have maybe some near-term risks here because we rallied too much in the short term, and now we have a rate issue in the short. I don't think that's going to be a persistent issue. It's a short-term issue.
It's convincing. You're convincing. I feel like I could just spend 10 minutes with you, Mike, and then we don't have to do the rest of the show.
Great. Let's do 10 more.
Mike Wilson there from Morgan Stanley. Great having you on the set. Thanks so much for joining us. Let's get a check on what's moving right now. We are just 10 minutes into, you know what, Shanali, you go.
Yeah,
go
I think
ahead
it's
and
my turn to do this, right? I have no idea. Well, I steal it from Matt while I take over the 9 o'clock. We have Microsoft, as we've been talking about, up on the year and up on the day. We have some love. Remember, when we were before market, before that tax bill passed the House, we did see negative energy in the S&P 500 really turning around a little bit now, but still down more than 0.1%. Alphabet, NVIDIA also on the upside today. You do still see Apple down by about 0.6% on a points basis, really dragging down the S&P 500, though others are down as well. Some energy stocks, Exxon, NextEra Energy, which brings us to the sectors. Energy leading the declines by almost the most. You see utilities dragging a little harder, but you do see some green on the screen. That is in communication services. We've been talking about the AT&T deal. Consumer staples as well, higher. This has been a defensive trade, but we have seen it hold up all year. Information technology higher, and of course, those rate-sensitive areas, real estate, financials, taking a hit. Consumer discretionary also taking a hit today, Matt, particularly as we see those earnings come in, all that positive energy and earnings not coming in to the broader index.
Yeah, for the year, consumer discretionary down 7.5%. And you're right, consumer staples has held up 5.8% year to date. Coming up, AT&T is buying Lumen's consumer fiber business as it looks to expand its broadband services. First on Bloomberg, Kate Johnson, the CEO of Lumen, joins us next. This is Open Interest.
Incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
And it's time now for our top calls, some of the analyst action and focus this morning. First up, Urban Outfitters getting raised to a buy at JP Morgan. The upgrade follows the retailer's strong earnings beat across its brands. And next up, it's a different story, though, for Target. The top stock is getting downgraded at Bank of America after the retail giant cut its guidance following a sharp pullback in consumer spending. And finally, Planet Fitness getting raised to a buy at Stifel. The analyst cites the gym chain's improved marketing efforts. He also notes that a Trump bill that's under consideration would allow gym memberships to qualify as health savings account expenses that could drive growth. Planet Fitness up a little bit in the market, Matt.
I could use a couple hours there, probably a week. Maybe I'll join. Switching gears, though, back to one of this morning's top stories. AT&T is buying Lumen's consumer fiber business for almost $6 billion. Joining us here first on Bloomberg to discuss the deal is Kate Johnson, the CEO of Lumen Technologies. Kate, great to have you on the program. We have really had the privilege of talking to you a few times over the past year about this growing business. Tell us just how this deal came about with AT&T and what sealed it.
Good morning, and thanks for having me. Couple things we see. First is AI is becoming mission critical for every enterprise on the planet in order to compete, transform, innovate. And the second kind of major trend is really about consumer. And wireless and fiber demand curves are converging. And you really need scale for to compete in the fiber to the home business. So we looked at both of those trends and said, we're going to double down where it makes the most amount of sense, where we have a right to win, where we have proprietary gifts with our physical network and our digital platform to give enterprises exactly what they need.
Kate, why not sell the copper part of the business? You did not sell the whole business. You kept the copper voice lines, and there could be an argument here that that's a part of the business that could otherwise have a drag as consumers disconnect from landline services. Why is it important to you?
That's a great question. So a couple of reasons. The first is that copper business is actually meaningful in terms of financial contribution to the company. And as we take that cash, we now have a choice. Do we want to continue to pay down debt? Do we want to continue to invest in streamlining our operations? Do we want to use it to acquire new capabilities to continue to grow the parts of our business that we know are essential for enterprise? But what's more, those copper assets are in wire centers throughout the country, proximate to almost all businesses. And as we've been talking about, we are innovating in brand new ways, bringing completely new architectures and constructs to the world of telecom. Those assets are essential. They're the secret sauce, actually, for us to provide something called direct fiber access to take advantage of what we're calling the fast lane for AI-powered business. So businesses can go right into our fiber and have direct on-ramps to clouds, bypassing traditional constructs that aren't secure, aren't as fast, aren't as high performing, aren't as intelligent. So critical assets required for our enterprise strategy. I think finally, the copper enterprise customers, they need a place to go. So sure, there's decline in the legacy business. That's not what we're all about. We're all about the customers, and those customers need to go someplace, and we've got a great future for them.
Okay, we've been seeing other deals in the telecom space, Charter and Cox, for example, and I wonder who's next. How many suitors did you have for this asset? Who else is hungry out there?
So it was a competitive deal, and obviously we can't give the details of that process. We're delighted that AT&T was the partner who stepped up. We got a great value for the company, and together with our retained assets, it's a very, very unique deal, but on par in terms of value with the rest of the deals that are happening in the marketplace. I think we'll continue to see consolidation and convergence in that space because we know scale is the game. And AT&T's got scale, they've got a great brand, and they've got a focus on consumer. It's their investment thesis for growth.
One thing that's most impressive, I think, about this deal is that it's a cash deal, right? Yeah, you're not seeing them go out and take more money out for this deal, and it's incredibly helpful for you. Now, my understanding is that about 80% of these proceeds are going to be used to pay down debt. Why not more?
Well, I mean, we're taking the net proceeds after tax, and we're using cash on hand, and we're paying down about $4.8 billion debt, which is a massive delevering for us. It takes us from, if you're using pro forma adjusted EBITDA, from like 4.9 down to 3.9. That's just the beginning. Remember that cash that's coming off of those other assets is another source for us to continue to delever the company. We're going to find a sweet spot where we're doing the right thing with every single one of those dollars of capital to yield the highest return. This gives us financial freedom and so much flexibility to build a future for enterprises that desperately need it, competing in the AI economy.
Kate, we thank you so much for joining us today. That is Kate Johnson of Lumen Technologies.
I bet you're not the only person.
She's taking it over. I mean,
she's the new Tim Apple.
Absolutely. Kate, we thank you so much for your time. Now, coming up next hour, we're going to talk to another CEO, Mark Douglas of Mountain, ahead of that company's trading debut. And before we go to break, here's a little more of our exclusive with Jamie Dimon talking about the state of markets and interest rates.
I don't agree we're in a sweet spot, okay? And I think you have to separate two things. The economy has been doing well. All the facts, we have effectively been in a soft landing. And I've already mentioned huge deficits. We haven't finished quantitative tightening yet. There are huge geopolitical issues. There are these inflationary factors out there. And they have to react to all of that. So I think they're doing the right thing to kind of wait and see before they decide.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhodern in Buenos Aires, Argentina, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, rising course, conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing right now. We're looking at an S&P 500 that's up 0.1%, so not much movement. The NASDAQ doing better, up about 0.5%. So tech stocks helping to drive us a little bit higher right now. If you take a look at NVIDIA, obviously it's one of the heaviest stocks in the world. At $2.5 trillion in market cap, up 0.8%. That makes a difference. Apple is a $3 trillion company, but it's only down 0.6%. Right now, Apple is a fascinating story because of the OpenAI deal. Snowflake, AI driving it higher, almost 9%. BJ's Wholesale Club, right now 0.2%. And I'm so excited, Shanali, because we're going to talk to Stu Leonard himself in the next hour.
I am a regular shopper there myself. I'm looking forward to hearing what he has to say. Now, I want to bring you some news as well. Kraken is allowing non-U.S. consumers to trade popular stocks like Apple or Tesla as tokens. This is according to the Wall Street Journal. Like Bitcoin, they would trade 24 hours a day. I'll be speaking with the co-CEO of Kraken later this morning in an exclusive interview to talk about tokenization. The big wonder is when it is all going to come to the United States.
Well, you know what? Yesterday, we talked to Mike Novogratz. I'm sure you're jealous. You missed that. You missed out.
It and I had to miss
on
it.
that.
Sad about it.
It's awesome to talk to him, but he said he thinks 1 or 2 months. We're going to see stocks tokenized in 1 or 2 months in the U.S.
It's actually a huge fight building under the surface. You have Robinhood, you have Kraken, others, Galaxy. They'd like to.
It doesn't even seem like a fight.
Well, what does NASDAQ?
It's like an agreement. SEC is the SEC is who they have to convince.
Exactly, the SEC. This is accredited investor rules. This is allowing this new form of stock to be sold. NASDAQ and NYSE, I'm telling you, Matt, they're not going to like it.
But very cool though for the kids, right?
Very
That's
cool
how the
for
kids
the
are going to trade stocks in the future. Coming up in the next hour, JP Morgan's Gabriela Santos joins us. We'll ask her what she makes of the ballooning U.S. deficit. Then Mountain's Mark Douglas finally has his IPO today. We're going to talk to him live on this program. And as I mentioned, Stu Leonard Jr. joins the show. This is Open Interest.
What would it mean for India to host the Olympics?
Yes, Linda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently? if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? So I think the move has to be a sustainable move.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. An arrest in the shooting deaths of a young couple outside a Jewish museum in Washington, D.C. The suspect, police say, is a 30-year-old from Chicago who shouted his message as he was taken into custody when he entered the museum. The victims, Israeli embassy staffers Yaron Leshinsky and Sarah Milgram. The Israeli ambassador to the U.S., Yehiel Leiter.
The young man purchased a ring this week with the intention of proposing to his girlfriend next week in Jerusalem.
Reporter Linda Gradstein has more from Jerusalem.
In a statement, Prime Minister Benjamin Netanyahu said he had ordered security arrangements to be boosted in Israeli diplomatic missions around the world. Israel's Foreign Minister Gideon Sa'ar called it a direct result of toxic anti-Semitism against Israel and Jews around the world.
President Trump cheering on social media after lawmakers in the House pulled off the narrowest of victories to pass what the president calls his big, beautiful spending plan. Correspondent Caitlin Huey-Burns from Capitol Hill.
It cuts billions in federal spending to Medicaid, food stamps, and energy subsidies. It also increases spending, though, on defense and immigration enforcement, and it makes permanent Trump's tax cuts that he passed during his first term, and also delivers on a key campaign promise to eliminate tax on tips and overtime pay.
Next up, the Senate. We've learned about a shooting outside CIA headquarters in Virginia this morning. CBS's Jennifer Jacobs.
Sources told CBS News that CIA security shot a female driver who approached the main gate and failed to stop. The woman was taken to a medical facility with what officials believed were non-fatal injuries. The CIA and the FBI were looking into the matter.
Fire officials in San Diego say it was foggy out when a small plane crashed into the Murphy Canyon neighborhood this morning, setting about 15 homes on fire. Several blocks were evacuated. KFMB TV's Kenny McGregor.
It's still smoldering in between these cars. Can't really make out what kind of cars they are. Obviously, they've just been utterly obliterated.
So far, no word on injuries or how many people were on the plane. The neighborhood is home to many military families. Need a new pair of sneakers? CBS's Jim Krasula says some will be getting more expensive.
Nike says it's raising prices in the U.S. The athletic footwear and apparel giant did not blame Trump administration tariffs specifically for the move. Almost all of what Nike sells is made in Asia. The company says its shoe prices will increase $5 to $10.
The Dow is up 15 points in early trading. S&P's ahead 10. This is CBS News. NFL owners did more than sustain the tush push at their annual meetings.
There's been more tweaking to the onside kick.
Onside kick to start it.
It had been limited to the fourth quarter for teams that are trailing, but now can be deployed at any point in the game for a team that's behind. But it does have to be declared ahead of time, and the kicking team will be positioned 1 yard closer to where the ball can be recovered. Also, Detroit withdrew a proposal to reseed playoff teams in each round based on their record. Critics said that move could strip some divisional winners of home field advantage. Steve Kathan, CBS News.
The Wall Street Journal's reporting the Treasury Department has issued a statement sounding the death knell for pennies. They'll stop putting 1-cent pieces into circulation by early next year. Once they're all gone, businesses will need to round up or down to the nearest 5 cents. Both President Trump and former President Obama have been critical of the penny. Deborah Rodriguez, CBS News.
If you need to... This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so check us out there as well. We had some existing home sales came in weaker than expected, the worst April since 2009, so we'll take a look at that going forward. Michael Shepard, Bloomberg Senior Editor in Washington, talked to us about the Trump tax bill. Looks like it's moving out of the House, now goes to the Senate. We'll see how the timing works on that. Walter Todd, President, Chief Investment Officer, Managing Director at Greenwood Capital, will give us his market outlook. And Drew Redding, Bloomberg Intelligence home building analyst, to discuss those home sales there. Mortgage rates going up, not good if you want to buy a house for sure. Max Abelson, Bloomberg News finance reporter, and Annie Massa, Bloomberg Wealth reporter. They got the big take story today talking about the Trump presidency and some of the financial gains that the Trump family is reaping in the early part of his second term here. So we'll have that reporting as well. Right now, let's kick it all off with John Tucker and a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash being brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. We are data dependent, so let's just recap the used home sales coming in at an annual pace of 4 billion. So that's lower than expectations on a month-over-month basis. That was down 0.5%. The yield on the long bond near a 20-year high. Investors increasingly worried about deficits as the Trump tax bill advances. And after yesterday's sell-off in equities, the major stock averages mixed to little change right now. S&P 500 it's actually pulled higher, up 18 points. That's a 0.3% rise, 58.62 on the index. Dow Jones Industrial Average is up 63 points. That's up about 0.2%. The Nasdaq 100 right now, 173 points higher, and that is up 0.8%. In the meantime, Bryant Levitt at Invesco says bond yields will be in the driver's seat for stocks.
Clearly, this is a market that does have some concerns, and we know that higher rates from here would weigh on equity valuations, given that the S&P 500 is trading at a valuation that's fairly elevated to its long-term average.
The tax bill would end subsidies for green energy years earlier than planned, so solar power stocks like Sunrun, they are getting crushed in today's session. Sunrun shares down 40%. China's BYD sold more electric vehicles in Europe than Tesla for the first time in April. This according to the market researcher Jado Dynamics. Penny, for your thoughts. The U.S. Treasury going to stop minting pennies within the next month.
Really?
Retirement of the coin meshes with, of course, the Trump administration's plan to reduce federal spending. It could lead to penny shortages as soon as January. It also creates a big headache for states in terms of tax revenue. I mean, what do you do? Like round up when you're collecting up to a nickel?
I don't know why businesses in general price a product at $6.27. Why don't you just make it $6.25 or $6? I don't know.
That's
because then you get to say that it's less than.
I guess.
I mean, yeah, it's the whole thing. I mean, Economically, it makes sense. It costs more than it makes. I'm just saying.
Look at you getting on board.
I know.
We check
What's
the
up with
markets
that?
for you. I'm cutting you short right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, we just have a red headline crossing the Bloomberg terminal. The Supreme Court has split in a 4-4 decision in a setback to religious school charter. We will continue to follow those headlines and give you any more updates, but that court now split 4-4. This is a setback then to religious charter school. Okay, happy Thursday?
Yes, Thursday.
Hey, yeah, right?
Which
Happy
for
Friday
me
Eve. Oh.
Memorial Day weekend
There it
translates
is.
into a Friday.
So Paul does his thing where he starts taking Fridays
the
off.
summers he takes.
So the guy takes no
That
vacation. He
explains
works
it.
after Thanksgiving. He works after Christmas, but he
Wait,
gets
back up. When you said he doesn't take
Friday.
vacations, I'm going to have to push back on that.
He does take some vacations, but he
Somebody
doesn't
who
take
has
the
to fill in.
holidays. So then we all get the benefit of that. But then every Friday in the summer, that guy's off. So happy Friday to Paul. Okay, let's take a look at some of the stocks in the move today. I'm Alex Steele. I'm not Paul Sweeney. I'm Alex Steele with Paul Sweeney. We are joined by Bloomberg's Isabel Lee. All right, you were looking at TD Bank. What's going on here, Isabel?
So this is interesting because it had a couple of news today, but for now shares are rising around 3.5%. That's its biggest intraday gain since February. So the bank reported adjusted EPS that beat analyst estimates. Jeffrey said that core earnings came in well ahead of expectations. RBC Capital said that this is, quote, positive, especially since adjusted EPS was higher than expected. Also today, the bank announced plans to cut its workforce by 2%, and that's part of a restructuring plan it initiated this quarter. And of course, the reason is to really reduce costs and achieve, quote, greater efficiency. And the bank has around 95,000 employees, so that's quite significant. But all eyes are also on TD because it's the first of its large rivals to report earnings since U.S. tariffs on a range of Canadian imports kicked in. And the results are good, so that might be good for the space.
All right, very good. How about the Snowflake?
This is also fun because shares are jumping 11%. That's the highest since February 2024. So Snowflake gave a strong outlook for quarterly sales, and that's after launching a slew of products over the last year. So product revenue, so this makes up the bulk of the company's software business, they said it will increase about 25%. So that's above analyst estimates. The company also raised full-year guidance. Evercore said that that bump came despite an uncertain economic environment. So it just really illustrates the confidence they have in management's, quote, durability of near-term demand. And Snowflake makes software to ingest and analyze data, and it really just focused on a lot more products last year, make LLM easier to use for their Gen AI products, so lots of acronyms there. But
So
all of those,
they're monetizing, like they're being
Yes,
successful
definitely.
in monetizing some of their offerings there. Okay, also taking a look at Galaxy Digital. So this is a digital infrastructure play, right?
It is, but it's also a Bitcoin play. I mean, it's higher
okay, I
by
get it now.
2.5%, and it just listed actually on Friday. So it's historical gain. It's around 30%, so that's good news. It previously was just listed in Canada, and of course, this was helmed by billionaire Mike Novogratz, who is one of the Bitcoin bulls out there. And we can't escape without talking about Bitcoin, which reached another record high. It's 111,000 right now, and just really a wave of optimism. There's a stable coin bill that was advanced in the U.S. Senate. So people are thinking that, okay, maybe we'll get more clarity. And of course, there's just really overall surging demand. It's a bull market, and you just can't stop those.
And also mentioned in the equity markets today, we had an IPO, Mountain, MNTN. That's Ryan Reynolds, the Hollywood dude. That's his company. He's the chief creative officer there, and he's a shareholder there. And Mark Douglas, the CEO, we spoke to him this morning. So that went public last night. $16 a share, still has not traded. So we'll keep an eye on that one.
All right. Thanks so much, Isabel. Really appreciate it. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere that you listen. The other news of the day, of course, is that the House passes the big, beautiful bill. Now it heads to the Senate. Joining us now for more details on that is Michael Shepard, Bloomberg senior editor in Washington. All right, what are the sticking points for the Republicans in the Senate now?
Well, what they're looking at are really the same sticking points that had really caused such a fight in the House. And the first is reservations about the overall long-term fiscal impact of the bill. There is a concern that this will add significantly to deficits. The Congressional Budget Office found that it would add as much as $2.3 trillion to deficits over the next 10 years. And that, of course, risks exacerbating what we've been seeing in the bond market. And that, namely, is concern about ballooning U.S. debt. And that was all highlighted by Moody's decision last week to downgrade the U.S. government's credit rating. And the other big concern, of course, is Medicaid. And we've heard this come up from some House members, and there was a bit of a split. There were a handful of conservatives who really wanted significant cuts to the program that helps the poor receive access to medical care with government support. But there are others who were concerned about the impact in their districts and their states and the political fallout. In the Senate, concerns about the impact politically and on healthcare in their states has been more vocal. And we saw Josh Hawley, a key Republican who represents a more populist wing of the party, expressing grave worries about what would happen to Medicaid, especially in his state of Missouri. So we're going to be watching those two themes, both on the fiscal side, but then also on what happens to that key entitlement program of Medicaid, Alex.
Michael, what's the timing here for the Senate? We know the Speaker of the House said, hey, we're going to get something done by Memorial Day. He did that. How about the Senate? What's their timetable?
Well, Mike Johnson delivered with a big assist from Donald Trump, who really drove lawmakers hard. He met with the Republican conference earlier in the week to say basically that anyone who voted against the bill or failed to support it and stood in its way would be guilty of the ultimate betrayal and would pay the price in the next congressional elections. In the Senate, it's a little bit of a different ball game. It's unclear that the leadership there is as enthusiastic about the bill with that same sense of timing. The Treasury Secretary, Scott Bessent, and the President really would like this done by July 4th. That may be a big ask. We're really a little bit more than a month away. Lawmakers are going out on Memorial Day recess, and the Senate does want to make some changes. They do face a deadline, though, Paul and Alex, and that is on the debt limit. The bill does contain a measure that would raise the U.S. borrowing limit and help us avert that, thing that we fear of a U.S. default. We're seeing an X date somewhere in August, at least according to the Treasury Secretary. So that gives them a target to work for before their August recess. But they do have a lot to get through, and the president may have to do some arm twisting in the Senate as well, just as he did in the House.
So talking my book here, I was really interested that they pushed forward the rollback for some of the clean energy tax credits. So the renewable investment tax credit and production tax credit is now going to be done in 2028 rather than 2029 and 2031. And there are other parts of that as well that have really put pressure on the clean energy guys. A lot of the clean energy projects are in red states. So how are Republican senators going to manage that?
Well, that's a great question, Alex, and it is something that really divided the caucus in a way because they do like getting that money, and it's sort of the same tension that we've seen in Republican and opposition from the president himself to the CHIPS Act and some of that funding and some of those subsidies. They like having the projects in their state, yet when they look at ways to find savings for this pretty expensive tax bill, they start looking for everything. And it's not only Medicaid, but as you mentioned, it is those clean energy projects and programs. They're trying to say that, look, we are going to accelerate the timeline, but not eliminate them entirely there.
All right. Michael, thank you so much for joining us. Michael Shepard, senior editor, Bloomberg News, joining us from Washington, D.C., talking about some tax legislation. A big move forward today for President Trump in the House. Now it goes to the Senate. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The major stock averages, The bond market that President Trump described as being yippy earlier this year is getting more yippy as the 30-year U.S. bond yield hovering near a 20-year high. Right now, 5.1093%, if you want to carry it way out. Investors getting more reluctant to lend the government money. And then the data at the top of the hour showed sales of used homes dropped in April to the slowest pace in 7 years. Right now, it's technology stocks, the best performers in the S&P 500. The best performing individual stock in the index right now, Google parent Alphabet, that was up 4.3%. Enphase Energy, the worst performer right now, and that is down 16%. S&P 500 unchanged, 58.44 right now. The Dow down 29 points. NASDAQ 100 is up 77 points. That's up 0.4%. You know what? You can't buy a gallon jug of peeled garlic at Saks Fifth Avenue. But what you can do is buy Saks Fifth Avenue brand clothes at Costco starting next month. This is Women's Wear Daily.
Say it again.
I said it. I'm not going to repeat it.
Oh, man.
Women's Wear Daily says the Saks Fifth Avenue brand name has been licensed to Centric Brands for men's apparel. They're headed to Costco over the coming month.
Wow.
Yeah.
I don't know what to make of that. I mean, that to me says
do you have to buy like 10 suits, like in a package from Costco?
I don't know, but like that would that imply that Saks is struggling in its menswear department? That's serious.
A good reporter would know that, but I didn't read the whole article.
That's some serious
just the
stuff.
First paragraph.
That's all right. Wow. Okay.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Alex and Paul.
All right, that was my brain exploding. Okay, thank you, JT. Appreciate it. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well as your over-the-top media stuff like your smart TV, Roku. You can check us out on Bloomberg Originals. Check us there. All right, Walter Todd is President, Chief Investment Officer, and Managing Director at Greenwood Capital. I gotta say, the markets are a little surprising to me, but just take a look at the bond market for a second. Is the long end getting yippy?
Yeah, that's a nice technical term for it. Getting a little skittish, maybe another way to describe it. The 20-year auction yesterday, you definitely look at the intraday chart and saw the equities key off of that. 20 years, a little bit of an unusual maturity. The Fed owns a ton of that sleeve, so not that surprising perhaps, but I know everybody's focused on that 30-year bond rate, but it's really the 10-year that's key. I mean, that's what a lot of assets are priced off of. So that's a touch lower today, and you see equities kind of keying off of that.
So those rates are pretty attractive here. Todd, are you getting increased discussions with your clients about, hey, should I be upping my allocation to fixed income? If I can get a 2-year treasury at 4%, I would take maybe a little bit more duration risk and get, more than 5% on a 30-year?
We're not going out that far, but a lot of our accounts are balanced accounts, so we do have fixed income exposure within that. Our kind of target maturity or duration is in that, call it 3 to 4 year range, but that's a barbell. So some 1 and 2 year paper, as well as some maybe 5 out to 7, but nothing really longer than that. So these are attractive yields, as you say. If you put a corporate spread on top of that, which have come in lately, but still decent, you can lock in some good rates for a multi-year period, which we find attractive. Now, interestingly, you've got several corporate issuers that are rated above the U.S. government debt at this point. J.P. Morgan being one of them, J&J another, and the credit default swaps for the U.S. government are actually higher than they are for J.P. Morgan at the moment. So there's a balancing act there between the two.
If you kind of ignored the last 2 months, you'd be kind of no worse off, unless you're talking about the bond market or to the dollar, than you would have been before. So how do you then understand equity market volatility going forward?
Yeah, Alex, this is a great question. And the equity market volatility has been extreme over that. If you've gone under a rock, like you say, 2 months ago and come out now, you're break even. I think we're going to continue to see volatility. And I think, it's going to be keyed off some of these macro headlines, whether that's, something affecting interest rates, whether it's this bill that has now moved out of the House into the Senate, which, by the way, this is the end of the beginning, not the beginning of the end, in my opinion, in this process. And then also finally earnings. I mean, we kind of forget about fundamentals of individual companies. They actually came in a bit better than expected in the first quarter, but revisions did come down quite significantly for the second quarter. So I think depending on the time of the year, the month we're in, and where we're going to key off of macro headlines or fundamental headlines, and then we have the trade component as well. So all of those things mixed together to, we think, continue some volatility, but take advantage of that where you have companies that know and understand and feel like are going to weather the storm.
Walter, what do you make of the stock market? It's seemingly we've round-tripped almost here off of the 20% declines that we had earlier in the year when people were really trying to get their handle around what a world of tariffs means. Are we appropriately priced here? Do you think the market's ahead of itself, or is there still upside here, do you think?
Yeah, I think in the near term, the market's come a long way in a very short period of time, and is probably, as Jamie Dimon, I think, used the term complacent to describe investors. We would tend to agree with that. Where we are today, I don't think we're pricing in a lot of risk. We're pricing in a lot of deals that have been talked about happening, but haven't happened on the trade front yet. So what we've been doing is just trying to stay disciplined on our sizing within positions. So names that have run significantly in the past 5 to 6 weeks, and we have a target of 2.5%. And that weight's now well over 3%. We're running that back to model, as we call it, for example. So just trying to stay disciplined within the process and, take advantage of the move that we've had and kind of reload for some more opportunities to come.
If we do get this big, beautiful bill passed and we get tax cuts or tax cuts extension, if we wind up getting deregulation and the Fed, as William said earlier today, could cut in July if tariffs come down to 10%. Is this like a complete then bull market? Like, can we finally look towards discounting all that good news?
Yeah, it's a good point. Yeah, no, but I mean, there's a long way from here to there, I guess I would say. So as it relates to the Fed, I think it's a stretch to say that we go in July, because you got to think about all this bill includes, is kind of pro-growth, post-stimulus. That's going to create upward pressure on prices, you would think, if growth improves. So I think the Fed's going to be on hold, so I don't think they're going to come into the picture probably till the fall. But yeah, no, listen, if you incrementally get this bill passed, the debt ceiling increased, if you get some trade deals, we're going to run up on that 90-day window in early July. So we've got to see some progress there. But yeah, it could create the catalyst for us to move up through those highs that we hit in February and beyond. I just think between now and then, we could see some downside.
Walter, thanks so much for joining us. Always appreciate getting a few minutes of your time. Walter Todd, he's the President, Chief Investment Officer, and Managing Director at Greenwood Capital, located in Greenwood, South Carolina, which I Googled, a little bit west of Columbia, South Carolina, a little bit north of Augusta, Georgia, and a little bit south of Greenville, South Carolina. So right smack in the middle of the great state of South Carolina. So some good stuff down there. Existing home sales, they declined here in April, marking the worst April since 2009. Mortgage rates are higher. That's not good for buying and selling houses. Let's check in with Drew Redding. He's a home builder analyst for Bloomberg Intelligence. Drew, I mean, not a lot happening out there. It's tough to be a real estate agent, I would think, today. Not a lot of action.
Yeah, it sure is. As you mentioned, sales are down another 2%, lowest level since September. Look, the existing home market has been in the penalty box for almost 3 years now. We've been below a 4.5 million annualized rate since 2022. That's about 25% below normalized activity. As you mentioned, the primary culprit is mortgage rates. We're back up above 7% now. We had thought we were making some progress to the lower side there, but it looks like not only are we in a higher for longer scenario, but it looks like we're starting to march back higher. But it's not just rates; it's home prices too. Prices are up about 50%.
Wow.
Since prior to the pandemic. So when you put those together, you have affordability, which is at historically low levels.
So how much do home prices need to come down to account for stickier, higher rates now? Which I feel like this is a question we asked like a year ago, by the way. I feel like we're just recycling the same conversation. But in reality, how much more do they need to re-rate?
So the analysis we did, which looks at monthly payments relative to income, would suggest that with mortgage rates of about 7%, existing home prices would have to come down somewhere around 30% for that payment relative to income to normalize, you know, to where we've seen it historically.
Yeah, again, if you're a real estate agent, you got to find another line of work there because there's just
forget about the agents. What if you're like a kid trying to buy a house?
Exactly.
What's
Forget it. You're
what's
done.
the average right now for a house nationwide?
Well, there are incentives now that are being thrown everywhere. Which I mean, did we learn about those incentives?
What's the
yeah,
price?
but I mean, how much are home builders offering certain incentives now to address the exact problem that John Tucker was talking about?
Yeah, I mean, it's dependent on the market, but anywhere from 7 to 10% of the average selling price. What we're actually hearing from the builders now, and we just heard this from Toll Brothers, their latest earnings report, is that they're starting to shift their focus on price and margin over pace. And that's because as they throw these additional incentives at buyers, they're not really having the same impact that they did last year. So they're not getting as much return for each of those incentive dollars that they're throwing out there.
So, Drew, I mean, this home affordability issue, which John Tucker just raised, I'm not sure I see a solution in the near to intermediate term. Do you?
Yeah, I don't think there is one in the intermediate term, and I don't think that's why existing home sales get back to normalized levels for quite some time. There's a couple of things you would need. You would need rates to fall significantly lower, which doesn't look like it's happening. You would need incomes to continue to grow, and you need home prices to moderate. So if you get a combination of those factors, you know, it would still take a couple of years to get back to normal affordability. What we're seeing, though, is significant increases in inventory across a lot of key housing markets. If you look at some in Florida and Texas, you have inventory levels which are well above where they were in 2019 already.
Really?
And in those markets, we are seeing prices falling. You know, we looked at some Redfin data, the top 50 home building markets, and year over year, prices were actually lower in about 20 of those. So we are seeing inventory start to do its job and give buyers a little bit more power, and we're seeing prices come down a little bit, but, you know, nowhere near the level that we need for affordability to be restored.
I love Redfin. You drive by a nice house and you say, "Oh, I wonder what that's worth." You just pop it right in there.
Yeah,
it's
totally.
awesome. Gives you a great sense.
You're literally saying, okay, when I get up in the morning, the way I wake up is I go on my email and I look on StreetEasy and Zillow and see what cool things are out there, and that's literally how my brain starts to function. So
thinking about because as you sit with your 2 3/4% mortgage.
Yeah, like I'm not going to do anything about it, but I'm gonna look at all the design interior. Yeah. Hey, Drew, really appreciate it. Drew Redding is Bloomberg Intelligence U.S. home building analyst, and it makes your mortgage rate look stellar.
Exactly, 6%, not going anywhere.
John Tucker does not appreciate. All right, coming up, we're going to talk to Max Abelson, Bloomberg News finance reporter, and Annie Massa, Bloomberg wealth reporter. They teamed up on the big take story of today, which delves into President Trump and his presidency and his lucrative ventures that have happened throughout. We'll break all of that down for you on a market that's rebounding. You have the NASDAQ up 0.5%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages mixed to little change. The outperformers belong to tech, Google parent Alphabet. That is up close to 4%. Let me look at Urban Outfitters. Those shares right now, they're outperforming, up 22%. The biggest intraday rise since November 2020. This is the apparel retailer reporting net sales for the first quarter. They beat the average analyst estimate. That's why that is up today. As the 30-year government bond hovers around a 20-year high, it looks like yields are in the driver's seat today for the rest of the markets. The 30-year up a basis point right now, close to 5.11%. Meantime, Katie McGee at JP Morgan Asset Management says investors need to look through the noise of the markets.
I think it's important for us to remember that there will still be a fair amount of volatility in equity markets, but important to look through that, focus on bottom-up company fundamentals, which is what we're trying to do.
And as Drew said, home resales, they dropped to a 7-month low in April. You can blame mortgage rates running at a 3-month high. I did look it up. Home prices, this is the average, up in April, setting a record, April record of $414,000 for a new house. This is
wow, and this is a national average?
Yeah.
Oh my gosh.
Golly. I still say, buy a crummy house and learn how to swing a hammer.
That's your right.
That's what
That's
you
my
say.
advice to kids.
That's what you say.
Yes, I do say that.
Can you just come up and finish my house in Massachusetts then?
No.
Oh,
S&P 500 down 4. The Dow Jones Industrial Average 84 points lower. The NASDAQ 100 is up 89 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Alex and Paul.
All right, thanks so much, John. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. We also cover all the great news that comes out of Bloomberg, and every day we try and hit the big take story. It's a deep dive into some of the pressing issues of our time, and today is no different. We're joined now in the studio by Max Abelson and Annie Massa from Bloomberg News. They had an in-depth piece about President Trump's family's money-making machine. What is the money-making machine, Max?
You know, if we were able to put it into one word or one line, we really would have. Unfortunately, it does take like 4,000 words to describe because the machine is really, really big. I think what we ended up deciding is that no modern American president has ever positioned his family to make this much money while in the White House, and you can't oversimplify it, either as a supporter or as a critic. You can't say, oh, what he's doing is crypto, or oh, what he's doing is licensing his name, or oh, what he's doing is going overseas, or what the family is doing is making corporate connections. That it really is, we ended up thinking about this as basically an atlas to what the Trump family is doing. You know, it's to take it seriously and to really focus on the facts and on the numbers and on the places. It was real work, and it was actually, dare I say, even fun to work with Annie on trying to figure it out.
There you go.
There you go. So Annie, I mean, is this? I guess part of the question is, depending on how you look at it, is this legal? Is it ethical? What are the folks in Washington saying?
Well, when you look at the scale of what's happening, even just today, President Trump has announced that he's going to allow the largest holders of his meme coin to come to a special VIP event. So one of the challenges of working on this story was that almost week by week, there would be new details to add. And I think what Max and I found was that to go through each of these different categories, we covered real estate, we covered crypto, we covered this kind of grab bag of other ventures that the Trump family has become involved in. You have to go really deep into each one, and there's a high velocity of new deals coming. Now, from the ethical standpoint, what the Trump family has decided to do is they've issued an ethics plan for Trump's second term, as they did in his first term. The way that they've handled it is by putting President Trump's assets in a trust, which is overseen by his son, Donald Trump Jr. And there are some differences in the ethics plan of Trump's first term and his second term. This time around, as we note in the story, the ban on new foreign deals that existed last time is no longer in place, and you can see the new deals popping up all the time.
I found it very liberating, actually, to in our work, rather than putting ourselves in a position where we wanted to say Trump is the most amazing president and everything he does is amazing, or being in a position where we have to say Trump is the worst president and everything he does is illegal. What we tried to do is just to understand piece by piece the way the family is making money. And it was helpful to just use Trump's own words and own plan. Last time around, in the first administration, he was unwilling for the family to do new deals around the world. This time, the family is embracing deals around the world, and by their own account, what they're not allowing is deals with foreign governments. And when Andy and I look closely, what we found is that there are some deals, especially in Oman, especially in Qatar, that really test the edge of that agreement. They are with arms of governments. Now, it may not necessarily be the Trump organization doing these deals. Sometimes there are entities kind of in between. There's this one developer called DAR Global. So what we're hoping listeners out there will do is read our story, because we really tried to very carefully and without kind of, without doing anything but the facts, just really tried to understand everything about this money-making machine.
So how much of this money-making machine are real deals based on like properties and hotels, and how much of it are like NFTs and capitalizing more on the celebrity that is President Trump?
It would be so bad to pick one or the other. Annie pointed out, is the meme coin dinner literally tonight?
May 22nd.
It's literally tonight.
That's why your story came out. See the news peg there.
But there's so many other things too. Annie was really good, in particular, at finding like these new corporate connections.
Yeah, one thing, so it's kind of everyone kind of knows that Trump real estate empire has in many ways moved for a long time, been moving toward licensing the Trump brand for hotels and developments. That's a big part of what they do now. But what's new were in the second term is you see his sons, Eric Trump and Donald Trump Jr., joining the boards of companies, both private and public, and lending the name in a way to those companies. And what tends to happen when they join, either in an executive role or as advisors, is, at least in the case of public companies, sometimes the share prices of those companies will go flying. So it shows the celebrity, to your point, and name that they bring into the business world, into all these different ventures, including in crypto, but in other realms too, like prediction markets.
And to be fair, what Donald Trump Jr. will say, and what he said to us, is, I'm a private citizen, I've been a businessman all my life, it's ridiculous to expect me to stop doing what I do just because my dad is president. And then what Donald Trump will say, a White House spokesperson said to us, is I'm transparent, and I handed over this multi-billion-dollar empire to serve our country. The White House described President Trump as making a great sacrifice. I think it's really helpful, though, to just look at the numbers. And I just want to quickly mention what we found is that the Trump name is powering more than $10 billion of real estate projects since the re-election campaign began. A multi-billion-dollar valuation for this social media company, a money-losing social media company that just went public. Yep. I mean, you forget, it went public last year, plus the money from crypto, plus the money from corporate connections. I think it's worth taking the time to kind of wrap your arms around it, because it really is sort of, I guess, unlike anything I've ever reported on.
And again, what I noticed is in this reporting that the first overseas trip President Trump made in his second term was to the Middle East. And I'm just looking at your reporting here. And when you talk about the real estate, it's Riyadh, it's Jeddah, it's Oman, it's Simi Izma, which I don't know what that is. I think it's Qatar.
That's Qatar.
So there I see the connection. And, does it make sense that his first overseas trip would be to the Middle East? So interesting. Andy Massett, Max Abelson, reporters, Bloomberg News. This is the big take story here today, the Trump's family money-making machine. Again, as Max and Annie reported, more than $10 billion of deals announced since his re-election got started here. You can read all of that on the Bloomberg terminal and at bloomberg.com/big take. So take a look at that. Some great reporting, some fun graphics. All makes it just kind of jump off the page at you.
Really does.
Appreciate that. Looking at the market here, S&P 500 off 7 points. The NASDAQ up 83 points. How about that? This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, earlier, JP Morgan Chase Chairman and CEO Jamie Dimon sat down for an exclusive interview with Bloomberg's Haslinda Amin at JP Morgan's Global China Summit in Shanghai. They had a wide-ranging conversation on markets, U.S. debt levels, Fed policy, and peace in the Mideast. In this portion of the conversation, Dimon focused on market volatility. He was first asked about complacency and volatility in yields reflects market pricing in global risk. Let's have a listen.
Talk about that kind of complacency. I'm talking about the asset price in the United States, and it's a long list of things. It's QE, it's fiscal deficits, it's global fiscal deficits, it's potential the trade wars. It's these huge, complex geopolitical situation, and I look at all of those probably not being properly priced into the marketplace. But we don't know what's going to happen. So, I saw last night's reaction. I don't worry about one-day move in bond markets. So,
you don't worry about one day, but when you take a look at yields, they are at higher levels than they were before Liberation Day. I mean, we talked about how 30's higher. And some are talking about 10s getting to 5s, 30s getting to, 7%. How are you assessing that? I mean, how high do yields have to go before they reach breaking point?
Yeah, I don't know the answer to that. No, we assess, the way we run the company is we prepare for a full range of outcomes, regardless of what you think. I just think there's a chance that you'll have stagflation. So I'm not saying it's going to happen. I don't want the reader to say he's predicting stagflation. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. And the infrastructure needs are inflationary. And now you have offsets. You have oil prices down quite a bit, which is quite deflationary. But with all those things taking place, yeah, you may be surprised.
As we said, it is a higher yield environment. And you have said before that we could see some sort of rebellion in markets around the world. Is that still a possibility? How might that look like?
Yeah, so I would not call it a high yield environment. I mean, if you look at economic history, rates have been far higher than this, and they surprise people over time. And like I said, I think a lot of the longer term trends have inflationary attributes to them. And so the other thing for your person on TV, credit spreads are low. So you can have two things go against you, which is credit spreads gap out and rates are going up. And so we'll see how it plays out. So I don't want to guess how it plays out. I'm on the cautious side. I'm a little skeptical that we're going to have kind of just an ongoing soft landing here.
I'd be remiss not to ask you about the Fed. Given the higher yield environment, which you say it's not, but it is still higher than what it was before.
Would it go higher?
Will it go higher? And also, will it force the Fed's hand?
Yes. I mean, there's always a notion that somehow the Fed is omnipotent and can do whatever it wants. And they do set short-term rates, but they also have to follow the facts. So they raised rates because inflation went up, and they can't control. Even today, trillions of dollars of these bonds are sold every day. That's done by investors around the world. They cannot control all of that. Foreigners own $35 trillion of U.S. financial tradable assets. And so, they have to react to reality, in which and that's not a criticism, they say they're data dependent, but they have to wait and see exactly what happens and then do the appropriate thing.
But the thing is, their reality is different from the reality you have in mind. If you take a look at what Neil Kashkari said, he said the U.S. economy is on solid footing. And some other Fed officials have said that in terms of Fed policy, it is in a very sweet spot. So their reality is quite different.
I think, I don't agree we're in a sweet spot, okay? And I think you have to separate two things. The economy has been doing well. All the facts, we have effectively been in a soft landing. That does not tell you what the future is going to be.
That was JP Morgan Chase Chairman and CEO Jamie Dimon speaking exclusively with Bloomberg's Haslinda Amin. So as you just heard him talk about, doesn't think we're in necessarily a sweet spot right now. He also went on to talk about relations between the U.S. and China, specifically saying, I don't think the American government wants to leave China. I hope they have a second round, third round, or fourth round, and hopefully it will end up within a good place, talking about those trade talks. That's what we heard after that 90-day reprieve, right? That the decoupling part is not something that they want, or dissolving any trade relationship is not the goal.
30% though still feels like a
it's huge,
sizable tariff here. So maybe that can be obviously the subject of discussion. And I'm just looking at a Bloomberg story that's kind of moving the markets. I mean, the markets today are being driven in large part by people paying attention to the borrowing costs around the world, kind of soaring here. Again, the 30-year Treasuries at 5.10%. We haven't seen that level in quite some time. And the Bloomberg reporting is from the U.S. to Japan, long-term borrowing costs for the world's biggest economies are surging as investors question the ability of governments to cover massive budget deficits. And so maybe, you know, as we think about the House version of the tax bill, maybe people are starting to question about all this spending and deficits. It's not just in the U.S., but other parts of the world. Again, Japan has seen its yields soar as well.
Well, exactly. That it's really a global bond sell-off from that point, which then I find a little bit confusing. So are we losing faith in like all governments to pay their bills? Like, is that what this is? Or is it a growth inflation issue? I mean, inflation in Japan is high right now. Expectations for inflation are also quite high. So I'm just kind of wondering which side that lands on.
Yep. You look at the curve in the U.S. here, the 2-year Treasury's at 4%. The 30 years at 5.1%, so 110 points of steepening there. So we keep attention to that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now as we look at a market that is pretty much flat with the S&P unchanged. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, happy Thursday, everybody. Happy Friday Eve to Paul. Happy Friday. His summer Fridays start right now. Alex Taylor alongside Paul Sweeney and Don Tucker. This is Bloomberg Intelligence Radio. We're following all the news for you over this next hour. We're going to check in on the bond market, those global long-end yields moving higher. Ira Jersey will be joining us from Bloomberg Intelligence. Also, Tyler Kendall will be reporting from D.C. on the latest with the GOP tax bill as it moves now to the Senate. David Kudlow will be joining us. He is CEO of Mainstay Capital Management for his outlook now on the markets. And Stuart Paul, U.S. economist with Bloomberg Economics, will talk about the economic data we're going to get next week, and also talking about John Williams saying that, look, if we can get tariffs now down to 10%, maybe we could cut in July. So lots to get through for this hour. But let's kick it all off for you with the Bloomberg Business Flash. And for that, we go to John Tucker.
And the major stock average is mixed to lower. Just 3 of the 11 major industry groups are up right now. It is being led by tech, helped along by Google parent Alphabet. Utilities, right now the worst performing major industry group in the S&P 500. Meantime, the Trump tax bill advances. Worries are growing over the deficits of the long bond yield over 5.1% right now. That is around the highest in 20 years, the yield. Amy Wu Silverman at RBC Capital Markets says, you know what, fixed income is driving the stock market once again.
And I think this kind of makes sense. If you go back to Liberation Day, you know, what finally shook the markets was not equities, it was treasuries, and that's kind of leading in again.
And the Labor Department reporting initial jobless claims hitting a 4-week low. Data suggests businesses are comfortable with staffing levels, even with a clouded economic outlook. Right now, the S&P 500 unchanged at 5843. The Dow Jones Industrial Average 35 points lower. The Nasdaq 100, that is up 86 points, and that is a rise of 0.4%. Look who's making a comeback. Booksellers, the small independent booksellers. Yeah,
What?
believe it or not. Well, I'll give you a comparison. In 2016, there were 1,200 members of the American Booksellers Association trade group. Now, the ABA is saying They have over 2,800 members at 3,281 locations, and more than 200 of these bookstores are in the process of opening.
Cool.
And it has to have a little niche. Like you have to have, like there's one the AP talked to where she just sells books that have been banned by various school boards.
Well, there used to be one on the Upper West Side called Murder Inc. I think it's actually, no, I think it left. It was right on the corner. I mean, it was this little tiny thing, and you could go in, and the person who owned it knew everything about murder books.
Oh, it's great. And then you would go to, or Shakespeare, and then you go next door to Barnes & Noble, and like, what?
And then go to Eeyores across. Yeah, oh well.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and also on the Smart TV. You can find that under Bloomberg Originals is kind of where we are. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele. We're joined by Bloomberg's Natalia Kenijevic. What are you looking at here, Natalia?
Let's start with Sunrun. The stock is down by 40% at one moment today.
Sunrun.
Yes, it was solar energy. Exactly. So at one point it was down as much as 42%, the most ever. Analysts downgraded the stock. Of course, it all comes as new House Republicans' version of this tax and spending bill aims to end incentives on clean electricity production. Now, clean electricity tax credits for sources including wind and solar could end starting in 2022. This is earlier than planned. And also the bill would require those projects to begin construction within 60 days of the legislation becoming a law. Initially, the version offered those tax credits to exist until 2032. To Bloomberg Intelligence, this is basically can disincentivize those solar producers, renewable energy producers, just to invest in that industry because it could drop below the threshold, which could stimulate.
Yeah, it's not great. It's definitely not good for these guys. What else are you looking at?
I'm watching healthcare industry. Hims and Hers Health shares. The stock is down by 5%. This is a telehealth company platform that sells obesity drugs. Early, it was down by as much as 11%. So people used to go to telehealth companies to buy cheaper compounded versions of this brand versus branded drugs, obesity drugs, right? Because insurance typically doesn't cover that. Now, Cigna, which is an insurance company which works with Eli Lilly and Novo Nordisk, wants to cover how much people typically pay out of the pocket, which could be about $200 per month, and that could be really attractive for some consumers. And as a result, we do see that the stock of Hims and Hers is under pressure today.
All right, we got Williams-Sonoma.
Exactly. Retail sector is hugely important today, of course. We see that results came above expectations. The company sees revenue somewhere between minus 1.5 to 1.5%. Net revenue came at 1.73 billion, still up 4.2% on a year-over-year basis. Bloomberg Intelligence is saying that this guidelines and outlook leaves some room for a positive surprise, but at the same time, some analysts were really disappointed that there is no absence of guidance bump, considering that results came above expectations. It's down by 8% today.
All right, Natalia, thanks a lot. We super appreciate it. Natalia Kenijevic joining us from Bloomberg. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else that you listen. All right. What are we doing?
Let's go to Ira Jersey because I want to talk to them about rates moving out. So,
thank you.
You know, again, the 30-year Treasury kind of jumps out at you here. We're up north of 5.11%. That really gets your attention. It's been a while since we've been at these levels. Ira Jersey, he's to blame. He's the chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, I mean, we don't talk much about the 30-year bond. We kind of peg everything to the 10-year, but I don't know, something well north of 5%, that gets people's attention. And I know rates around the world are soaring. Are people actually starting to pay attention to deficits and things like that?
Yeah, it's a big part of it for when you think about the fiscal situation, not only here in the U.S., but globally. I think there is some concern that there's going to be a lot more supply of sovereign debt, whether it's in Japan effectively, with the Bank of Japan not buying the long end as much and ending its yield curve control policy that it had for the last few years. And then you think about places like Germany and some other very highly rated sovereigns maybe issuing a lot of debt in order to fund things like defense spending programs, thanks to some of the policies that President Trump's trying to get more burden sharing from those countries. So all of these things together, I think, have really have really caused investors to rethink what the shape of the yield curve should be, with the long end needing to be much higher. But do keep in mind the yield high, we haven't yet breached it. The yield high for this cycle is 5.17% that we hit back in late 2023. Not quite there, but getting awfully close.
Well, I was going to say, so we're at 5.1. I'm actually a little surprised that we're not even higher, and I appreciate we've had a chunky move yesterday. Yeah. But do you think we actually breached that high, or is this like really the top here?
Yeah, so these are interesting levels for a lot of investors, particularly those at what we call liability-driven investors. So these are particularly life insurance companies, and in some cases some pension funds and others in terms of what we call vol sellers, so things like variable annuity accounts and the like. And when you reach these type of 5%, 5.25% level, it really fits a lot of mandates and people who need to book yields that are very long duration and meet those kind of actuarial requirements. So I do suspect that we'll see some nibbling here. Now, I think that we need another headline, another bit of either bad news on the deficit or maybe a slowdown in the economy that people worry that we're going to have even higher deficits than we currently project. And that could be the next impetus for another leg down in price, up in yield for the long end of the bond market. But regardless, I think one way or the other, the yield curve is going to continue steepening. That's been our call the whole year. We don't see any reason for the steepening to really slow down significantly, but it could turn a little bit more into bull steepening than kind of what we're calling twist steepening here, where short end yields are going down, long end yields are going up. That's probably not a situation that can be sustained for a very long period of time.
Ira, we've got the 2-year Treasury at 4%, the 10-year at let's call it 4.60. So let's call it 60 basis points of steepening in there, 2s and 10s. Can you put that into context for us? Is that a lot? Is that a little? Is it good? Is it bad?
So generally speaking, when you go back for, say, the last 50 years of interest rates, well, let's take the 80s out of the equation, but let's say the last
80s
40
were very
years
good
of
to me,
interest
Ira.
rates. me too. It was good times. I had very long hair back then, pat down my shoulders.
Picture, please.
But we'll do that, Alex, for you. So if you look at interest rates, usually when interest rates are very high, you wind up with a very flat yield curve where you wind up with zero or even a little bit inverted of a yield curve. And then when the Fed's cutting interest rates, you tend to get a very steep yield curve. So we're not quite mid-range. Yeah, 2s, 10s tends to be somewhere between 0 and 200 basis points, and we are there. Our fair value, for a variety of reasons, we have it around 75 basis points now. So I think there is the possibility that you can see a little bit more steepening in 2s, 10s. But that 10s, 30s then becomes much more interesting because to Alex's point, if we get another 15, 20 basis point sell-off in 10s and that yield curve even stays the same, we could be making new cyclical yield highs for the 30-year yield if that were to occur. So that's a distinct possibility. Now, again, not our base case scenario. I think that 517 will hold, but it's still something to look out for. And there's not a lot of we'll wind up going back to 2007 type of highs if we break that 517 level.
Wow. Okay, I know that's not your base case, but just knowing the relationship between equities and the long end, are we sufficiently pricing that kind of term premium into the equity market?
You'd have to ask Gina Martin-Adams and Chris King that from our equity team here at BI. But it's interesting because you have seen a disconnect between the normal relationship between fixed income and treasuries in particular and risk asset markets, right? Where you've seen sell everything or buy everything markets more recently, and I think that goes into the idea that that in a slowdown you wind up having much more supply, and then people worried even more and more about the U.S. fiscal situation and there being a buyer strike. So, and if you get that buyer strike, you could wind up seeing both equities and fixed income actually not do particularly well. Now, I would presume that fixed income will outperform risk assets, but by how much is not as certain as it used to be. So things like risk parity type of trades have not worked out very well and might not work out that well in the future either.
Ira, thanks so much for joining us. Always appreciate getting a few minutes of your time. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence down in Princeton, New Jersey. Red headline, crossing the Bloomberg terminal, Senate votes to end California gas car ban. They're going to send this bill to President Trump. So we'll have some more reporting on that. That's just crossing the terminal right now. Let's go down to Washington, D.C., get the latest reporting on what was a successful day for the House of Representatives passing their version of the tax bill. It now goes to the Senate. Tyler Kendall joins us, Bloomberg Television Washington correspondent. So, Tyler, just characterize how the House got this thing done this morning, number one, and number two. What are next steps?
Yeah, hey, Paul. So it was really an all-night effort, and House Speaker Mike Johnson was able to get this bill through the House and by his self-imposed deadline of Memorial Day. And it did take some last-minute agreements as well as some wrangling from the White House ultimately to get it over the finish line. We should say not everybody was happy with this bill and not everybody voted in favor of it, including two of those fiscal hawks that we had been watching pretty closely, Thomas Massie of Kentucky and Warren Davidson of Ohio, two Republicans who have already said that they were concerned about what this bill would do to the deficit. At the end of the day, it was really two sort of pillars of agreements here that got this done. One was lifting the SALT cap from $10,000 to $40,000. That also will phase out for those that make incomes above $500,000, and that number will go up by 1 percentage point each year for the next decade. That was a very important part of ultimately getting this agreement done. The second part, of course, as you well know, has to do with the savings policies related to this plan. Those members of the House Freedom Caucus were able to move forward the Medicaid work requirements from 2029. Now they'll go into effect December of 2026, so next year. And then lastly, those IRA tax credits, clean energy tax credits under that Biden-era Inflation Act essentially now will be rolled back more quickly. We're expecting those to be rolled back by 2028.
What's the path forward in the Senate timeline here?
It's going to be tricky. We'll see how it shakes out. They want to get the entire reconciliation package done by July 4th. That is the White House's self-imposed deadline. Lawmakers likely have a little bit of buffer room here because really the big deadline is going to be when the X date comes up, likely as estimates say in August. So perhaps they have a little bit of time on that one. We already know that there's going to be some big issues here. Senators have made clear that they're not totally happy with how the House bill is currently written. One, they want to see some deeper tax cuts. They want to see some of those priorities made permanent that are currently temporary. Think factory incentives as one example that would benefit the private sector and businesses. The other part of this is that the Senate doesn't really seem inclined to lift the SALT cap. Senate Majority Leader John Thune in the past really hasn't been in support of hiking that cap, but at the end of the day, we heard from House Speaker Mike Johnson earlier this morning, who said that he has already made his case that it is going to be a delicate equilibrium, as he called it, in order to get this bill passed. He's using the thin margins that he passed this bill to make the case to the Senate that they really do need to keep some of this House bill intact if they want to see it ultimately passed and to President Trump's desk.
Tyler, thank you so much. We appreciate that. Tyler Kendall, Bloomberg Television, Washington correspondent down in D.C. Again, the House passing their tax bill today. The Senate will now take it up. And as Tyler was just reporting, kind of have a self-imposed deadline of getting July 4th, I guess.
You got to do it around holidays or else there's no incentive.
Yeah, I mean, it's if you don't get it done, you're not leaving kind of thing.
It's like, and then it's like, oh, okay, well, let's definitely wind up getting that done.
It worked this time. So, I mean, for Speaker Johnson, it was definitely a victory. I don't care if it's just by one vote. He got it done. Victory for President Trump. I'm not sure President Trump has the same influence in the Senate than he does in the House, because he spent, a good number of hours there a couple of days ago speaking with members there. So,
I mean, talk about whipping people into shape. I mean, President Trump / serious whip there. Yeah, I don't know if he has the same kind of sway in the Senate as well. But nonetheless, it narrowly passes the House as we take a look here at the markets with the NASDAQ down, up by 0.4%. But you know what, Paul? It feels like this is holiday trading 101 because not a lot of movement, not a lot of volume, also not the same kind of move in the bond market that you might have thought. But as Irish Jersey was saying, like, we're not yet at the top of this cycle.
Well, it doesn't feel like Memorial Day because it's 52 degrees here in New York. It feels like 43.
I had the heat on last night.
I know. What is going on?
But it was like 82 weekends ago,
I know.
so I don't know what to make of that. All right, coming up, we'll be talking to David Kudla for his take on how to navigate these uncertain markets. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. The major stock averages, they are mixed right now. The S&P 500, a little changed, up just a point right now at 58.46. It's technology that's leading the tech stocks. Tech stocks are leading the S&P 500 higher right now, along with the NASDAQ 100. That's up 100 points, up about 0.5%. The Dow Jones Industrial Average 31 points lower. That is down 0.1%. Lighter than usual volumes for today ahead of the Memorial Day holiday weekend. At about 6% lower for this time of day, the trading for the S&P 500. Google parent Alphabet shares rising, extending the previous session's rally. Investors growing more optimistic about the company's latest AI features and the applications. And then you have the solar stocks plunging as the House Republicans' new version of the tax and spending bill accelerates the end of the incentives for clean energy production. Sunrun shares, take a look at those. They are down right now 39%. And then you have advanced auto parts shares. They're up right now 47% after the retailer reported comp sales that fell but less than expected in the first quarter. And then we're still waiting for the first trade. Connected TV advertising platform MNTN, Mountain, and some of its shareholders raising $187 million in an IPO. It was priced at the top of the marketed range, $16 a share. Again, still waiting for the first trade. Ryan Reynolds is the company's chief creative officer. Yeah. Does he actually show up for work, or is there like a, just
he was
a
an
title?
original investor, and he was kind of all into it. Mark Douglas is the CEO. He's a frequent guest on Bloomberg Radio. We spoke to him this morning.
You got to ask him if we can get Ryan Reynolds on the program. So.
We had him once. Back
you did?
Yes, yeah, back when the company was just starting.
Okay, all right. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
I tell you, when I was running this IPO process, I got my IPOs open at 10:15.
What is the delay, though, with all these?
I don't know why it takes so long now. I mean, it used to be you had buy orders and sell orders, and you just had to really match them up and make sure you had the stock with the right people that weren't going to flip it, that were going to hold it, and blah, 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 at certain levels. And it takes a little bit of time, but 10 o'clock, 10:15, none of this 11:30, 12, 1 o'clock. I don't know what they're doing these days. But
they need Paul back there to
I'm
instill
going back
a little
there and put these
discipline.
guys into shape. John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Boy, talk about a round trip. Just take a look at a year-to-date chart of the S&P 500. It's almost like, never mind, the stock, the S&P 500 is pretty flat on the year. But there's been a lot of movement in this first 5 months of the year. David Kudla, founder, chief executive officer, and chief investment strategist at Mainstay Capital Management, joins us via Zoom from Troy, Michigan. David, it's almost like the market's kind of made its peace here with a higher tariff environment wherever this thing shakes out. What does it mean for a money manager?
Yeah, well, you're talking about the round trip, right?
Yeah.
Where we went down through April 7th, and we've come all the way back. If you look at where we are today compared to 2 months ago, we're about the same level, but a lot of volatility in between. And really what this is the Trump put in action. And that is, what happened is he came out here over these, past couple of weeks, but especially when they made the deal with China, even if only for 90 days, that was the biggest risk for stocks really in the first half of the year. I think now we're a little bit more worried about long-term bonds and what those higher yields will mean for the market. We're seeing the risk shift because the tariff picture has gotten a little more clear. Expecting more deals to come, but that's really what it is. The thing is with this Trump put is we're always just one social media post away from another market decline or another market gain, and it really is at the whim of what President Trump is saying or doing on any given day. That is driving the markets and driving wild volatility into the markets over the past 2 months.
Yeah, but haven't we learned, though, that there is a Trump put? The puts may be in the bond market, but there is one. So now are we reconditioned to buying the dip? I mean, retail got it right.
Yeah, retail got it right. And look at where we are today. Earnings didn't collapse. We ended up with great earnings above 12% for the first quarter. We've got a tax deal that just passed the House. It's going to be a problem for bonds because of what it adds to the deficit and debt, $3.8 trillion as it stands now. We'll see what happens in the Senate. But for stocks, it's fiscal stimulus. And, if we have the trade deal with China for the next 90 days, if anything, the permanent deal will be that or less in terms of tariff is what we believe. So you look at and the bullish nature of buybacks, which are in high gear right now in May, as buyback seasons come back in, we're going to set records for corporate buybacks again. So there's a lot to like about stocks right now, and investors have just priced that back in.
So what screens well for you these days, David? I mean, it looks like we do have a higher tariff limit, you know, whether it's 18% weighted average today or something maybe even lower. Probably lower earnings growth here. Where do you see, I guess, attractive opportunities?
Yeah, and I'll tell you, we're, you know, as much as I say it's very nice how the markets come back. You know, we are cautious on the markets to a degree in 2025 because of some of the risks that are on the horizon. The biggest being what happens with long-term bond yields, what we've been seeing here these past days. And so we like gold. We like gold for a lot of reasons, you know, from what's happening to it as a reserve currency to, you know, so that's creating demand at central banks. The fear trade, it's the ultimate fear trade. So we've been bullish on gold, continue to be. We hold it in all our portfolios, full disclosure, all of our tactical portfolios. We're short JGBs. We're short Japanese government bonds. We've seen what's happened with the meltdown over there. And
are you short on the long end, David, for those?
Yeah, I'm sorry, on the long end, yeah. And as I've been talking about on the show for 5-6 months now, we like Europe this year. We think Europe's going to outperform the U.S. markets by a very wide margin.
And what's the catalyst for that, I guess? Because, or has that catalyst already worked its way out? Many say that, well, the ECB is going to be a lot more dovish than the Fed, and that's sort of the nice catalyst for Europe. But then you have John Williams saying today that potentially if tariffs come down to 10%, you could see that cut in July.
Yeah, well, I don't think we're going to see a cut in July. You know, the forecast of 3 to 5 rate cuts over the next year or so, that's not going to happen. I'll take the under on that every day of the week. We're not going to see the Fed cutting. In Europe, the ECB is cutting. They don't have as much of an inflation problem. The ECB is cutting, and they have fiscal stimulus because of the pullback in NATO. So we have Germany has their own $1 trillion euro stimulus package, fiscal stimulus package. The EU and the euro together, another 800 trillion. So we have fiscal stimulus. We have monetary stimulus. Compare that to the U.S. We have essentially, you know, from a fiscal standpoint, you know, we have some help with the tax cut package, but from a monetary standpoint, this is the problem for the Fed. We've said often the Fed is between a rock and a hard place. They're between a rock and a hard place right now. If they were to cut right now, what do you think would happen? What would be the reaction function? We would see the 10-year and 30-year bond go higher. The bond vigilantes would come in full steam ahead, hotter than heck, and raise the long end of the curve. So what will the Fed do? They'll print. The Fed will print money, and that, you know, that's going to add liquidity in the near term, but certainly not a good thing for the long term. We know that.
David, always great catching up with you. David Kudla, founder, Chief Executive Officer, and Chief Investment Strategist at Mainstay Capital Management. Red headline, crossing the tape here. Google faces DOJ antitrust probe over deal for AI technology. So those tech companies remain firmly in the sights of the regulators down in D.C. Let's check in with Stuart Paul, U.S. economist with Bloomberg Economics. He joins us here in our studio. We got some economic data here today, Stuart. I'm looking at the PMIs. They came in better than expected. That really surprised me. We just, the headline, composite PMI came in at 52.1. The consensus was 50.3, and last period was 50.6. So the economy is hanging in there.
Yeah, but I always take PMIs
underneath the headlines.
I do a little bit, but more than anything, I take PMIs a little bit with a grain of salt because there are surveys talking about whether activity is increasing or decreasing. If you see a prolonged period where activity has been decreasing, there's a bit of a reversion to the mean because everything is being considered in the context of the past month's activities. So whether you're looking at the flash PMIs from S&P or you're looking at ISM, history really does matter, and a lot of what's going on under the hood in terms of inventory accumulation everything in terms of production activity, new orders. It really matters month to month. This is not the sort of thing that makes me breathe this dramatic sigh of relief, but of course it's better to get that upside surprise than the opposite.
What does the bill do in terms of the deficit for the U.S.? What's your modeling?
So we're still estimating a material add to the deficit. If you start factoring in things like tariff revenue that comes from the West Wing, it's a bit less. I think that we're still charting a course close to 135% debt to GDP over the next 10 years or so.
And that's a lot.
And that is a lot.
Okay, just want to be clear.
That is a lot. And I think that that's part of why we're seeing a little bit of upset in the bond market. I mean, we were hearing something similar from IRA Jersey earlier this morning. So I think that, yeah, fiscal policy is still on an unstable and unsustainable trajectory.
You're an economist. I mean, come on. You guys always worry about that stuff.
That's his job.
I know, it's his job. Initial jobless claims, I don't know, the labor market still seems okay to me. What did you guys think?
Yeah, there was a small downside surprise in initial jobless claims, 227,000 additional claims during the previous week. What I'm most worried about, though, is longer-term unemployment. We're still seeing continuing claims rising, and that's going to add upward
So
pressure
continuing
to
claims,
the
that
unemployment
is
rate.
people, as the name implies, it's not just this week. They're
Correct.
continuing over and over. So if you see that number trend up, that's not good.
It's not good. It means that it's taking more time for people to find jobs. It means that hiring is slow, even if firing is not especially fast. And that's enough to add upward pressure to the unemployment rate. That's enough to indicate to us that the labor market is cooling.
All right, Stuart, thanks a lot. Really, really appreciate it. Stuart Paul, U.S. economist with Bloomberg Economics. Just some breaking news for you. The Justice Department is now probing whether Google violated antitrust law with an agreement to use the artificial intelligence technology of Character.ai, which is a popular chatbot maker. The probe's looking at whether Google structured the agreement to avoid formal government merger scrutiny and whether the deal gives Google an unfair advantage in the AI ecosystem.
Stock's up 3%.
Okay.
It's one of those things. I don't know, but I'm not sure what to make of it, but I know somebody who does.
And that is?
Mandeep Singh from
There it
Bloomberg
is.
Intelligence. So he's going to join us in the next segment and tell us, is this just another thing that big tech has to worry about in terms of
I
government
thought this government was
oversight?
going to be friendly.
That's what I thought, too.
Well, now we're learning that there are some issues. We will break that all down for you right after this. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. We're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Following the worst equity rout in a month, the S&P 500 today kind of wavering. Alphabet extending its 2-day surge to about 6%. This is despite the headline you guys read earlier that Google is facing a DOJ antitrust probe over AI. Mandeep is going to be along in just a second to explain all that. Bitcoin topping $111,000. Traders taking cues from the bond market, the still elevated level of yields keeping a lid on riskier bets. The yield on the long bond holding above 5%. But Russell Brownback, he's at BlackRock. He says he's not too worried about the rise in the yields.
This is the third sort of bond vigilante scare, quote unquote, we've had over the past 3 years. The first two didn't really play out. My guess is that this one won't either.
Right now, the S&P 500, 3 points higher, 58.48 on the index. The Dow's up 47 points, and the Nasdaq 100, 87 points higher. That's up about 0.4%. Walt Disney has notified Florida-based employees who are losing temporary legal residency in the U.S. that their jobs will be terminated next month. This comes after the Supreme Court ruled that the Trump administration could revoke protections for 350,000 Venezuelans. The company actually sent an email to employees under temporary protected status this week, stating they've been placed on a 30-day unpaid leave. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive studios, streaming live on YouTube as well, and also on that connected TV stuff. Think Roku and Samsung TV. If you got that kind of stuff, you can get us. Bloomberg Originals is kind of where you go find us there. Again, the Justice Department is probing whether Alphabet's Google violated antitrust law with an agreement to use the artificial intelligence technology of a popular chat maker, according to people familiar with the knowledge of the matter. It's not that they're probing an acquisition that they want to make. It's using somebody's technology. I don't know. Stock's up 3% on the news. It doesn't seem like the market's that worried. Mandeep Singh, he'll tell us what's going on here. He covers all the technology stuff for Bloomberg Intelligence. Mandeep, I mean, usually the DOJ comes in when you make an acquisition and says, whoa. But this is just looking at a deal or a contract they made with some AI provider?
Yeah, I mean, in fact, all three of them, Google, Microsoft, and Amazon, did this acqui-hires of these startups back in 2024. So these were three different companies. Google did that for Character AI. Microsoft had the same sort of setup for Inflection. And then Amazon did it for Adept, which is another small AI company. And if you remember, back at that time, Lina Khan was the force, and everyone was reluctant when it comes to making these acquisitions. So this was their way of licensing the technology. They were effectively paying a license fee, and in most cases, it was non-exclusive. But it ended up basically bringing those employees to work for Google in a way where it wasn't an outright acquisition. It was an independent company still, but they paid the current shareholders of those companies a licensing fee, which pretty much was like 65 to 70
kind of transaction.
Some
smart lawyer somewhere came up with that.
But how different is this from what, say, Microsoft is doing with OpenAI?
Well, that's a 49% stake one. And in that case, in the case of Microsoft, you're right. I mean, the comparison is apt in the sense that OpenAI still remains independent and they're launching their products. In this case, a lot of the folks who were working at Character AI did end up working on Google's projects. And so same thing with Microsoft. The folks at Inflection AI did end up working on Microsoft's projects. That didn't happen in the case of OpenAI. OpenAI still is kind of doing its own thing when it comes to model training and everything. Microsoft is just licensing the technology. That's not the case here in terms of Character AI, because Character AI was a company with less than 200 employees. And Google ended up licensing that for almost $2.5 billion. So think of, a license fee of $2.5 billion.
That feels hearty.
Mm-hmm.
Yeah.
And so,
I see, I
look,
get it.
I think there was that aspect which was kind of in between in terms of how do you make an acqui-hire without an outright acquisition, and the amount was pretty big, and everyone was surprised. But all these three companies did that one after the other.
Yep.
So they somehow got away, and now we are seeing the DOJ is looking into it.
All right, if I'm on Sand Hill Road in Silicon Valley, where all the smart money is, how do I view this administration here? Are they pro-tech or not pro-tech?
I think so far they are looking to bring down the regulations for sure. We have seen some pretty big deals getting announced. I mean, the Google's acquisition of Wiz, that is an M&A. $32 billion. And,
yes,
and so there has been a flurry of M&A activity. So I would say they are pro deal making. At the same time, I think with big tech, every company is different in terms of, how the administration views them. And, the DOJ and FTC have been doing these investigations. So it doesn't surprise me that they're looking into it. I doubt there will be a big fine, but probably you should talk to Jen Rhee, our legal expert, if what she thinks about this.
But Paul pointed out that the stock is up over 3%. How much of that is like ignoring the headlines versus still going back to the AI Developer Day for Google, where they unveiled the whole suite of products?
Yeah, I mean, that was a great event. And overall, I think the sentiment this week is still Google's models are getting better. Their execution is getting better. They're shipping a lot more products. So this seems to be something that, yes, they are involved with. At the worst case is they may have to pay a fine, but really nothing changes as far as their AI development efforts.
When I started my career on the street in the mid-'80s, it was all about Microsoft and their regulatory challenges they were just starting to go through, primarily with European regulators, and we were freaking out like every day, like, oh my God, there's going to be it. And then we look back on it 10 years later, and we're like, nothing happened. And I think a whole generation of us have kind of become conditioned to viewing big tech and regulation as not that big a deal. Don't worry about it at the end. I wonder if we're getting too complacent, though. Will they ever say Amazon break up, Google break up, or one of those things?
I mean, there is always a probability of that happening. I still think it's a low probability event, given everyone wants these companies to do better than the equivalent Chinese companies. And so that aspect still remains. And look, the worst case with these sort of investigations is these companies may end up paying a fine. That's what we have seen in the EU. Google has paid over, $10 billion in fines. And the stock will still be okay because this is just one time. They make the remedies and you move on. So I think that's the worst case here in terms of a slap on the wrist, and you change the behavior. You're not going to do more acqui-hires like that, billion-dollar acqui-hires. But beyond that, it's hard to fathom.
All right, Mandeep, thank you so much. We appreciate it. Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence. Here's a Bloomberg NEF note out that just hit my inbox. Okay. U.S. House bill is a big and brutal blow to clean energy.
Yeah.
That says it all right there.
It's real bad.
EVs, wind, solar, and battery developers are hit harder in the bill. Advocates hope U.S. Senate will make improvements to tax credits. But, I mean, that's a reaction piece of research that says it all there is to say there. And we see it in the stocks.
I mean, it was bad the first time when it came out of the committee, and it's even worse with what actually passed the House in terms of the phase-outs for the credits.
They're calling it a nightmare scenario for U.S. clean energy advocates and defenders of the Biden-era Inflation Reduction Act.
What it's really bad for is hydrogen. That's negative love on that. But I go back to the fact that a lot of projects were started in red states, so I don't know what that means for the Senate.
Right.
But the direction of travel seems very clear. So But then again, you also have the Trump administration reapproving a wind project off the East Coast. So it's still gray. It's still fuzzy. It's not a straight line. What is a straight line is the commodity market, maybe. I don't know. We're taking a look at gold, Bitcoin. We're going to talk to Mike McGlone, a senior commodity strategist for Bloomberg Intelligence. Crude sitting at $60 a barrel.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Thursday, Friday Eve. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 2,000 industries and 2,000 companies worldwide. That was hard.
2,000 companies and 130 industries.
Industries, yeah, that was hard. You memorize it, and then if you lose one word, it all goes away. We also cover broad commodities, and that's why Mike McGlone in the studio, he's senior commodity strategist for Bloomberg Intelligence, joins us now. We talked about crude yesterday and how the cost of production might have to go to 40. Nerdy question for you. I was reading a note from Bank of America that says that basically all the good stuff in the U.S. onshore has been drilled. And so I'm wondering if the cost of production's a bit higher now because you don't have the super cheap supply in the same way that you might have last downturn.
Those kind of stories I've heard for a number of years,
Okay.
and I don't know why, because they seem to be ignoring the most significant trend in commodities is it's good that they're coming out when prices are lower, because those are coming out in 2022 when prices are higher. And the significant fact is we still have an increasing excess of supply versus demand in the U.S. Liquid fuels, crude oil, biofuels, NGLs, you name it. So that maybe is going to start mattering. To me, it's more the macro. We do have a new administration that's fairly motivated for lower crude oil, and it's, we're seeing the supply curtailment from OPEC that was in for a few years coming back on. And we're seeing demand decline in China. So I don't see what stops it other than lower prices. To me, that's more of a stuff that's really in the weeds. It's the macro that's overwhelming. And to me, the biggest next step is for crude oil to stay above 60, it absolutely, above 65, last year's low. Yep. It absolutely needs the stock market to go up, which means what happens if it goes down. We all saw what happened. Everything bottomed in April, when about April 9th, the stock market bottomed.
All right, they've been waiting to write this headline forever, Bloomberg News. Bitcoin surpasses 111,000 for the first time. Come on now. I mean, I'm buying it because it's just a commodity.
You're not buying it.
No, but I mean, if I had stupid money, I just, it's one of those things that you're going to look back and say, 20,000, 40,000, 60,000. I mean, I don't know what's driving it.
Well, I have to admit, I'm not on board for this rally. To me, it's
and
getting...
you haven't been for a while.
No, since last year. Since ETFs, my goal was initially waiting for ETFs to get launched. Once we got the kick in from the President Trump switching back over, finally he figured it out. And we had all the mess speculative, Hubry and SX was coming. I feel like this is a pile-on trade now. And it's very risky. And the bottom line I've been pointing out forever, I do like that, right? I've been writing forever, is it digital gold or leverage beta? Right now, to me, it's much more leverage beta. But the fact that it's up almost 20% in the year and that the stock market's flat is great, but it's still being beat by the rock. Gold is still beating Bitcoin in this environment. So that ratio right now, it's getting up to about 34 ounces of gold per one Bitcoin. It's the same as 2021. It's picking up. But I view these levels as very speculative, excessive. And there's one story in the Bloomberg terminal today that pointed out someone was putting in a 40x leverage on a Bitcoin position, over $1 billion. And the key thing they point out here was the stop was below the market. It struck me, having traded with stops my whole life in futures, and I used to have hair, is you could run through those stops and markets are closed. You can gap through them. But this market never closes. So I think it enhances people to put on more and more leverage and risk, which I think is the stage we're getting now. It's just getting a little too excessive.
Oh, that's interesting. Let's turn to commodities for a sec. Well, we are in commodities. I meant the ags. So I'm taking a look at, say, coffee down by about 2.5%. I'm looking at corn pretty much flat. You got the beans up 0.5%. One question is the macro and how do ags wind up playing within the tariff conversations, and the other is more micro, which is how's the planting and the harvesting season?
Going well. First of all, I'll start with the latter. We're almost done with corn up to 80% planted, ahead of schedule. Beans catching up maybe 65% ahead of schedule. The weather's been good for planting. The old saying was if you plant in the dust, the beans will bust. The farmers push back on that, but we're getting decent weather for planting. And now it's all about the 3 months, June, July, August, and September, see how the weather is. The key fact is unless we get a drought, it's more likely prices are going to continue towards that lower price curve. Because what you said when you started out the segments, all these markets are getting stuck in very narrow ranges. Like corn stuck between 4 and 5. Soybeans stuck between 10 and 11. To break out above, no, we're going to get a weather scare. We always get a little bit of drought scare. You pop up the upper end of the range. And my sense is farmers are just waiting to sell that new crop ahead because they're learning the lessons. And the key thing that I learned living and going to the Midwest is, the old saying that Mark Twain says you might as well buy land because they don't make it anymore. In the Midwest, they say, well, they are in Brazil. Massive supply of soybeans and corn out of Brazil. And the key thing to remember was on the back of that big pump in prices, it brought down those elasticity forces.
How is it? So it takes 3 or 4 months to grow this, like corn and
Typically,
soybeans?
It's 100 days. Corn's a little bit longer than beans. You can get shorter-term growing periods, but it's the rotation that matters. So what's happening this year is we've added about 6% to corn planted acres because the prices are relatively high and stocks to use are relatively low. But we're pulling back in soybeans because stocks to use in soybeans are about 32%. Well, That's very high, global
If I go to the store tonight and buy some corn, where's that corn coming from?
Well, you're buying sweet corn. This is mostly feed corn. Most of the corn in this country is used, that you hear about, number 2 corn is used for ethanol and feed. And so it's
we got a lot of corn in Jersey. We grow sweet Jersey corn.
There you go. It's yummy. But you're not feeding that to your cattle, and you're not using it for ethanol. About 1/3 of it's used for grains. And to end with this, and one thing I always like to point out, some people say, why are we using our food for transportation? Well, before the Model T came on, most of the land in this country was used for transportation fuel for horses.
Yeah, okay. That's fair enough. All right, Mike, thanks a lot. Good to see you. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio and SiriusXM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now when it feels like the markets are already on holiday, when you have really light volume markets a little bit to the upside.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Global leaders have expressed outrage over the shooting in Washington, D.C. that killed 2 Israeli embassy staffers. Israeli Cabinet Minister Nir Barkat.
There's no excuse in the world for creating terror, targeting innocent people like this. The world must wake up and collaborate together against terror and the roots of the terror.
The 31-year-old Chicago man who shouted "Free Palestine's been arrested. Attorney General Pam Bondi.
We will follow the facts. We will follow the law. And this defendant, if charged, will be prosecuted to the fullest extent of the law.
The 2 people killed were a couple planning a summer engagement. Now to San Diego, where a small plane crashed into a neighborhood early this morning. More than a dozen homes caught fire. Mayor Todd Gloria.
We'll be supporting these families who are impacted here. They're part of the military community that makes up our city, proud partners of our community.
Only minor injuries on the ground, he says. Fatalities on the plane, that number not clear. The U.S. Supreme Court weighed in today on the bid by a Catholic charter school in Oklahoma to get public funding. CBS's Jan Crawford says it was a 4-4 decision.
When they're deadlocked, that means that the lower court ruling in the case will stand. And in this case, it was the Oklahoma Supreme Court which ruled that taxpayer money could not go to these religious charter schools. So that ruling in Oklahoma will stand.
A federal judge has blocked President Trump's executive order to shut down the Department of Education and ordered the agency to reinstate employees who were fired in mass layoffs. The president has hailed House action very early this morning on his spending bill.
The bill is passed.
This is a major victory for President Trump and Speaker Mike Johnson.
It's a great day to be an American. It's a great day to be a Republican.
The legislation extends the expiring tax cuts and includes more money for the military and the border. It eliminates taxes on tips and overtime. The bill also makes big changes to Medicaid. Johnson's message to senators:
to modify this as little as possible because it will make it easier for us to get it over the line ultimately and finished and get it to the president's desk by July 4th.
Stacey Lynn, CBS News, Washington.
The U.S. Senate voted today to block California's first-in-the-nation rule banning the sale of new gas-powered cars by 2035. And the U.S. Mint has made its final order of penny blanks and plans to stop producing the coin when those run out. President Trump has targeted the penny, saying it's too expensive to make. Right now on Wall Street, the Dow is up 76 points. The S&P is up 9 points. The NASDAQ is trading higher. This is CBS News. A music superstar has gone back to the kind of place that was part of his younger days.
The outcasts and
While he was in town for a concert with Post Malone, Jelly Roll took some time out to visit staff and inmates at the Hennepin County Jail in Minneapolis. He talked about his first incarceration at the age of 13.
I knew that if I squeaked out of this one, there was no chance for my history if I caught another case. Even now, I'm petrified of it.
The singer spent the next 13 years in and out of jail, but now he can get himself out.
I would like to give you an honorary Hennepin County Sheriff's Office.
The sheriff gifted him a giant key to the jail. Deborah Rodriguez, CBS News.
The Chicago Sun-Times and Philadelphia Inquirer have apologized for running a syndicated summer reading list. Turns out the writer used artificial intelligence and non-existent books were on it. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
House Republicans passed the bill. Now comes the hard part. Welcome to the Thursday edition with the ink still drying on the president's big, beautiful bill. We'll let you know what's inside. Coming up in a live report from Capitol Hill, Bloomberg's Tyler Kendall is standing by, and we'll have insights from Mike Dorning on our Capitol Influence team about what comes next, because big changes are expected when this legislation gets to the Senate, and we'll talk about that with Republican strategist Alex Conant from Firehouse Strategies. Donald Trump has a big night tonight, hosting a couple hundred wealthy crypto bros for a private dinner with the president, raising new questions about conflict of interest in this administration. We'll get into it with our panel, Jeannie Shanzano and Rick Davis, and it's all after a look at Wall Street. We start, as always, with the markets and the voice of Wall Street. Here's Charlie Pellet in New York.
Here's what's going on. We got one big, beautiful bull today with the Dow, the S&P, NASDAQ all advancing. 7-point run up right now on the S&P, reversing earlier losses, up now by about 0.1%. The Dow up 56, up 0.1%. NASDAQ higher by 108 for NASDAQ. The composite index up 0.6%. NASDAQ 100 index up 0.5. Russell 2000 up by just about 0.1%. The Bloomberg Mag 7 index, tech stocks surging, that index up by 1.1%. 10-year at 4.55%, with the 2-year 3.98%, the 30-year 5.06%. Gold down $20 the ounce, $32.94 on the precious metal right now, down 0.6%. West Texas Intermediate crude oil down 1.3%, $60.79 a barrel, and Bitcoin now at 111,450 on Bitcoin, up now by 2.9%. Yes, a record on Bitcoin. The focus very much on Washington today. Investors are concerned that President Trump's signature tax bill that narrowly passed the House will boost the nation's already swelling deficit. Gabriela Santos is chief market strategist for the Americas at J.P. Morgan Asset Management. She was interviewed on Bloomberg Open Interest.
So we do think the tariff storm has really calmed down. We just, of course, still need to understand exactly the impact on both the real economic side, the inflation side, earnings. But quickly, the narrative, the market attention has pivoted full on into this reconciliation bill and all of the details of it.
And, of course, a whole lot more coming up right here on Balance of Power. On an update for the rest of the market, clean power stocks are plunging. Investors there running for the exits. Case in point, Sunrun. It is down now by 39.7%. Sunrun is America's biggest rooftop solar energy company. Also moving lower, shares of Solar Edge Technologies down 21%, and Enphase Energy down 18.4%. Balance of Power continues right now. Back we go to Washington. Lots going on. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you, Charlie Pellet, watching Wall Street for us every day here on the fastest show in politics. We'll get back with Charlie a little bit later on this hour. Everybody's keying off the bond market right now, including, well, the stock market, with eyes on what happened last night and early this morning in Washington. The big, beautiful bill cleared the hurdle, 215 to 214. The tally here, it happened when a lot of people were waking up. The Rules Committee finishes a 21-hour-long hearing. Can you imagine? Lawmakers are falling asleep left and right. And the speaker said, we're going for it. brought it to the floor early this morning, before most people even left the House, and spoke with reporters when it was over. Here's Mike Johnson.
We look forward to the Senate's timely consideration of this once-in-a-generation legislation. We stand ready to continue our work together to deliver on the one big, beautiful bill, as President Trump named it himself. We're going to send that to his desk. We're going to get it there by Independence Day on July 4th, and we are going to celebrate a new golden age in America.
So that's the deal here now, right? We're going to get it on his desk by July 4th. That assumes a lot. We're going to walk through what's actually inside the final product, at least on the House side. Don't consider anything final. Everything's going to move. Senate's going to make changes. Everyone's going to get banged up over it. They're going to go into conference committee, and it is likely the House will have to vote again, and that might be a lot more difficult than this one was. Even though folks like Chip Roy and others in the Freedom Caucus ended up being yes votes, they may not be when the Senate is done. Or could it be the other way? Maybe the Senate kicks out the SALT cap. They lose a bunch of moderates while they're at it. We want to be careful here because a lot can change, but it's important to know where we're starting here in the House. And that is the good work that Tyler Kendall is doing on Capitol Hill. She's with us right now from the Cannon House office building, the very rotunda where you see the lawmakers talking with us on a daily basis here. Tyler, it's great to have you. I know you've been up for many hours here. Let's get the nuts and bolts on what's in this bill, and then I want to talk to you about a couple of things. The fact of the matter is the Trump tax cuts will be extended, the SALT cap will be lifted, Medicaid will be cut. How am I doing so far?
Yep, you got really the big headlines there, Joe. Of course, this will extend the 2017 tax cuts that are set to expire by the end of the year. Also makes good on some of those campaign promises, such as temporarily eliminating taxes on tips and overtime pay. Includes some other sweeteners that we've been following, such as incentives to build factories in the U.S. But at the heart of it were the two latter items that you mentioned. One, lifting that SALT cap from $10,000 to $40,000 to get those Republicans from high tax states like New York, New Jersey, and California on board with this plan. And then the other part was to get those fiscal conservatives that really need to see some deeper savings policies, as they call it, in order to get their vote on board. One, that includes moving forward those work requirements that will now start December of 2026. That's next year, of course, up from the 2029 originally proposed timeline. And then the second is speeding up the phase out of those clean energy tax credits under the IRA. Those will start in 2028 now, also a more expedited timeline here. Now, to be sure, as you said, all this could change, and not everybody is happy with this current plan, but it's ultimately what needed to get done in order for the deal to get over the finish line amid what was heightened pressure from this White House.
We heard from Tom Massey, of course, the thorn in the side of Donald Trump at almost every turn here, the Republican from Kentucky who was always a no, remained a no. He said this bill is a debt bomb ticking, Tyler. Congress can do funny math, fantasy math if it wants, but bond investors don't. We don't have to get into the bond market right here, but I wonder how Mike Johnson managed to turn so many other no's into yeses. I already mentioned Chip Roy, Ralph Norman, another one. Was it the changes to Medicaid that brought them to a yes?
Right, and we should also mention that the other no was Warren Davidson, a Republican from Ohio, who also yesterday took to X to highlight the bond market. I can also say that I asked Tim Burchett, who ended up being a yes earlier this week, whether or not he was watching the bond market. He said ultimately he does think it's a canary in the coal mine, but then he decided to vote for this bill. And so at the end of the day, it does seem like perhaps these speeding up of work requirements got enough of these fiscal hawks on board, as well as the heightened phase out of those IRA tax credits. But we should also note that there was some late night sort of dealing with the White House, and our indication is that perhaps there are some other deals to work on future legislation or perhaps future executive actions with this administration that could address the deficit. It was interesting to see President Trump post on Truth Social shortly after his meeting with some of those House Republicans last night, refloating perhaps the idea of privatizing Freddie Mac and Fannie Mae. Things like that perhaps we should be keeping our eye on about how this administration is going to talk more holistically about raising revenues as one option. But at the end of the day, as you're talking about this, we're going to have to see how it all shakes out. Whether or not the Senate really is going to get on board with some deeper spending cuts or fiscal, perhaps, responsibility, because we're talking about deficit spending in the House. When we look at what the Senate is looking at, there's going to be some heightened concerns from fiscal hawks there, because they're already talking about changing some of those savings policies.
Sounds busy up there, Tyler. I keep hearing about jet fumes. Sounds like a lot of people are still around. Tyler Kendall is live on Capitol Hill, so you don't have to be. We need her in that rotunda. Tyler, thank you so much. As we add the voice of Mike Dorning now, we need to talk to a voice of experience now that we've gotten this far. Helps to run our Capital Influence team here at Bloomberg. Mike Dorning, they actually cleared the hurdle. Mike Johnson says they'll have it on the president's desk by the 4th of July. Does he need to talk to John Thune about that?
Well, that's an ambitious goal, but they have kind of created this artificial deadline that they'll probably meet, which is to get it done by August. And that's because they've attached the debt limit increase to it, and there's a warning that if you don't increase the debt limit, there could be a default as soon as August or September. So as long as they keep those things together, it's going to help motivate the Senate to get it done by August. And you say we're going to get it done by July, and it's like when you hire a contractor, if they say July, maybe August.
Yeah, right. Of course, you've seen a lot of these negotiations go down. Just what are your impressions on what happened in the last 24 hours to get Republican members like Chip Roy to vote yes, realizing they may not like what comes back from the Senate, but they got it this far.
Well, they all like having the tax cuts. This is not a group of people who...
So were they never really no's?
They never really wanted to say no. They all wanted to get to yes, but they wanted what they wanted. I mean, Chip Roy, the conservative hardliners talk a lot about deficits, but what they really want are the tax cuts. But they do care about the deficits, and they want to get the spending down. The SALT Republicans, they do care about that SALT, but they want the tax cuts. The ones who are concerned about cutting Medicaid too much don't really want to cut Medicaid too much, but they really want the tax cuts. And Johnson wants to get it done now. Trump wants to get it done now because God knows, Biden was popular, could get a lot of stuff done early, but then by the end of his first year, it was harder for him. They want to strike while the moment's hot. So the people in the like Trump and Johnson and Thune want to get it done now, and those other people they knew that the deadline was the end of the year. So you're kind of by trying to get it done now, you're trying to make sure they make their concessions now.
Hakeem Jeffries says Democrats just won the midterms this morning. Is he right?
I think that may or may not be true.
I think he thinks he's got a good story to tell, though, when it comes to Medicaid cuts, doesn't he?
I think probably the thing that will matter a lot more for who wins the midterms is what happens to the standard of living of the American people. Is there going to be too much inflation because of tariffs or something else? Are people going to have a bad economy? That will have a lot bigger impact. But, this does give them a talking point, and they can cast this, and they certainly are energetically casting it as, give to the rich, take from the poor.
Right, exactly. The big question, one of many big questions, of course, is what lasts after this bill goes to the Senate? What's coming out of this bill? And we're going to talk about that coming up with Republican strategist Alex Conant. Mike Dorning, thank you. You probably haven't slept in 3 days or something, right? It's the man editing all this stuff at 1 o'clock in the morning, or in the case of this morning, when did they pass it? Was it 7, something like that?
So luckily, there was someone else on to do the boarding stuff.
It's a big team around here, but we'll give Mike credit for it. Thank you, sir. Good to see you. This day that the bill passes, stay with us for more on the fastest show in politics on Bloomberg.
1 on Wall Street. We do check markets all day long here at Bloomberg. The U.S. Justice Department is probing whether Google violated antitrust law with an agreement to use the artificial intelligence technology of Character AI, a popular chatbot maker. Right now, we've got Alphabet shares pushing higher by 2.7%, part of a broader tech rally today that's seeing NASDAQ up 0.7%, the NASDAQ 100 index up 0.6, S&P keeping it all in context up 14 now, up 0.2%, Dow Industrials up 84, also higher by about 0.2%. Wall Street is showing signs of stabilization just a day after that Treasury sell-off that shook markets around the globe. The 10-year 4.54%, the 2-year 3.98%, 30-year at 5.05%. Gold now down $17 the ounce. Spot gold down 0.5%, $32.97. West Texas Intermediate crude down 1%, $60.93 a barrel. Bitcoin, a record there at 111,440 on Bitcoin, up today by almost 3%. BYD, China's top-selling EV maker, sold more electric vehicles in Europe than Tesla did for the first time, overtaking the American brand that long led the continent's EV segment. Today, BYD, the ADR is down 0.3%. Tesla shares up 2.4%. Again, recapping, the Dow, the S&P, NASDAQ, they're all higher, and the S&P up by 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues. Right now, back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Watching Wall Street for us at World Headquarters in New York, the great Charlie Pellet, the voice of Wall Street and the New York subway, incidentally, which we can talk about another time. I'm Joe Matthew in Washington. It's good to see you here. Just hours after the bill passed the House, 215, 214, the magic number on the big, beautiful bill. The president's happy, and so is the speaker. I can only imagine what John Thune is thinking right now as it now heads next door to the Senate. Interesting, when we do the math, 215, 214, a couple of Republicans missed the vote. Did you hear about this? These were not just any Republicans, by the way. Andrew Garbarino, right, of New York. We've talked about the SALT caucus so much on this program that you know the name by now, was not only involved in getting the SALT cap lifted, but he was dealing with the clean energy tax credits and was a pretty vocal player in the negotiations here. Didn't show up for the vote. Spokesperson for Garbarino says after sitting through proceedings all night, the congressman briefly stepped out and inadvertently missed the vote. Speaker Mike Johnson, asked about it later, said, no, he fell asleep in the back. He was in the room. No kidding, he said. I'm just going to strangle him, the speaker joked, but he's my dear friend. How about that? After all that work, you slept through the vote? As for Congressman Schweiker, did not respond to a request for comment, but Johnson said the Arizona lawmaker arrived late to the chamber. Too late to have the vote counted. But they still got it done, even with that happening. Cleared it by one vote. So the question that we're asking today is, what survives? What comes out of the bill? What does the Senate do here? And that's why we want to turn to Alex Conan, Republican strategist partner at Firehouse Strategies, and a voice of experience at times like this. Alex, it's good to see you.
Yeah, good to be back.
This conference committee ought to be a riot. Senators don't have the same priorities that House members do in this case. What do you see coming out? Is the SALT cap the first thing?
Yeah, look, I think you had a real delegation in the House that cared a lot about the SALT caps. You don't have that in the Senate. You don't have a bunch of Republicans representing high-income tax states who really care about the SALT caps. So you're going to see pressure on that. I also think they made some changes to the SALT caps and how they did it, and how they treat pass-through entities, for example, that I think a lot of Republican senators are going to have issue with. So there's going to be changes to the SALT. There's going to be changes to Medicaid, because I think a lot of it was more moderates in the Senate who care about Medicaid and how that funds their states. It's going to be a different bill, but I think the big picture is going to be largely intact, because there's a reality, like, they have to get it done.
Tax cuts.
They have to. They're not going to let the tax cuts expire. Full stop. And they want to do all the spending stuff. So they have to get it done. They want to get it done. They're going to make tweaks. There's going to be some significant changes just to get it through the Senate. Then there may be a conference committee, as you mentioned, which I think would be where they can come together, or the House may just take up the Senate bill if it's not if they can.
That would be
the cleanest way, and probably what they want to do. look, they're going to pass it. And so I don't think the market should be surprised. I don't think onlookers should be surprised that this bill is going to go to the president's desk. It's going to change, but it's not going to change drastically.
You drop the SALT cap, you lose the moderates. You start making changes, tinkering around with Medicare, restore some of that funding, Medicaid rather, move back the work requirements. Thank you. You lose Chip Roy and members of the Freedom Caucus. This could be a more difficult vote the second time around in the House, no?
Look, it could be. I give a lot of credit to Speaker Johnson and his leadership team getting it through this. Look, I think as of 48 hours ago, people thought there's no way they're getting this done today.
Yeah.
You had both.
We heard the bill was falling apart. Alex.
You heard the bill was falling apart. You heard the moderates were saying no way. You heard there's as many as a dozen conservatives who were saying no way. People were really dug in. And look, he brought everyone to the table, and I think people realize the longer this hangs out there, the harder it's going to be to pass it. Yeah. And Speaker Johnson made some savvy political moves in the last 48 hours. Clearly, the president coming up and really wringing some necks, twisting some arms helped. But I give the speaker a lot of credit. I think this was harder than getting the final bill done, because the final bill done is, look, do you want to let the tax cuts expire or not? Okay. It's a negotiation, and look, he proved to be, I think, a much better negotiator than a lot of people expected.
Well, maybe I'll ask you this question a bit differently. You upset the SALT caucus, you upset the Freedom Caucus. Is raising the debt limit, knowing that that is a real deadline, we've got an X date approaching, is that potent enough to override all the rest of these concerns?
Look, nobody wants to raise the debt limit, at least on the Republican side of the aisle. They know they need to. They know the president.
It's raising it by $4 trillion.
Yeah, well, they don't want to do it again in 6 months. So they're going to raise it as much as they can get away with within their caucus. Look, I think they have to raise the debt limit, and they have to extend the tax cuts. So this bill is going to get done. It's going to change. Look, I think there's a lot of things inside the bill that are going to get tweaked in the Senate, but ultimately it's going to go to the president's desk.
Fascinating. This being, of course, a Republican exercise when it comes to reconciliation. It's a little bit different than a lot of other debates where Democrats are going to be involved and there's a greater negotiation to be had. But this is still a bonanza for Washington, right? This passage today gets the gears turning in the whole apparatus across the town. K Street just woke up. And a lot of money is going to be spent on trying to preserve elements of this bill and to try to remove them. Bring us inside that conversation. How does that work?
Well,
and what's it going to be like?
It's not like K Street didn't wake up yesterday or this morning, right? Like
they've been billing constantly.
I think everyone has known since 2017 that the tax cuts were going to expire this year. And 2017 was a big year for corporate America. I think 2017 was unique because everyone was seeing their taxes get cut as part of that bill. The corporate rate was coming down. There were tax cuts across the board, individual tax cuts. The only people that really didn't see it go up were the people from the SALT states. But there were a lot of winners in 2017. I think there was a recognition early in this tax process that you're going to have winners and losers this time around. This is not going to be an across the board tax cut. It is a tax cut, but it's really a tax extension, right? So the corporate rate, for example, is not changing. Corporate America is not getting a big tax cut here, at least compared to what they paid last year. And so, yes, you do see corporate America and other taxpayers, whoever's paying taxes, engaged, but it's a different fight. It's more about it. It's more of a negotiation here, and you're seeing winners and losers. This morning, the clean energy guys did not come out well last night, and their stocks are getting hammered this morning accordingly. Sure. I'm sure that they will be putting a lot of pressure on the Senate. And look, there's going to be a lot of Republican senators from states that have big clean energy footprints that are going to be receptive to that.
Absolutely.
And so, look, I think when we talk about there's going to be tweaks along the way, I think those are the kinds of tweaks we're probably talking about.
That's fascinating. So, and I'll add another layer. We haven't talked about this yet this hour. The president's going to be holding an event later on today at the White House with RFK Jr. This is the Maha stuff, right? This is going to be the unveiling of a report on how to make America healthy, and there's an expectation that the health secretary is going to call for, and we've heard this a lot of times, the removal of certain food dyes, maybe even fertilizers. This is something that corporate America is going to have a lot to say about, isn't it?
Well, I think corporate America. I also think consumers. People like red M&Ms.
Well,
right? And so and they like having cheap food and processed food. While I think they're, as the secretary is going to lay out, there's questions about some of the health long term. There's also the add benefit of having cheap food, especially in an era where people are already concerned about grocery prices.
And if you're a farmer worried about tariffs, they're going to take your fertilizer
Yeah,
here.
well, I mean, and look, you're seeing within the Trump administration a lot of pushback by USDA, by the Agriculture Department on that specifically, because look, we have to produce a lot of food, and if the farmers don't have fertilizer, it's harder. It's not going to work so well. So look, I think I'm interested to see what RFK says today. He's already facing pushback from within the administration. I think you're right. Clearly, there's going to be food manufacturers and grocers who are going to have concern. I also think there's going to be consumers that have concern, because I think people, at the end of the day, look, I'm a Republican. I'm a classic small government, limited government conservative Republican who really doesn't like the government telling me what I can and can't eat. Sure. Now, I want to have the information, and to the extent this is all about making more food, what's inside food more transparent, that is pro-free market. I'm all for that. But to the extent this is telling me what I can and can't eat, I think a lot of Republicans, not just, forgetting about just your average consumers, but I think a lot of Republicans in Congress, that's going to make them a little uncomfortable.
Enter Kirk Vashaw, who runs a company called Spangler Candy Company. They make sweethearts and dum-dums, lollipops. Not a fan of this idea. He told the Wall Street Journal, this is fascinating, "I'd rather get cancer than eat the bug," referring to an instance when his company used this coloring that came from insects. How many Americans feel that way when they hear this conversation in Washington?
Look, I think Americans want to eat healthy food. I also think they want to eat their M&Ms.
Right.
And so again, I think if the end result of this is that people have more information about what's inside the foods they're eating, I think you're going to see a lot of support for that. And we've seen that over the last couple decades, right? Like better nutritional information, not just on food, but the things we drink. Yeah. In some places, the restaurant menus and the like. I think for the most part, consumers appreciate that. I think consumers push back when they're told, "Hey, you can't drink that much soda. You can't eat that much food." That just is not popular. Americans don't like being told what they can.
It also doesn't seem to be the Trump brand. But he's going to stand up there with RFK Jr. today.
Well, again, RFK Jr.'s endorsement was a really big deal in 2016, and Trump knows it, and Trump's going to pay him back.
He's not going to let him near the Big Macs.
I mean, well,
I'm pretty sure about that.
There'd be a lot of it, not just the president. I think a lot of Americans would have issue with that.
Can they get this done by the 4th of July? This is the line today.
What's
the new deadline that the reconciliation bill is on his desk by the 4th. Not just a vote, but it's actually
in theory, no reason they can't. I think people were skeptical when they said they were going to get it out of the House. Yeah, I think the Senate's. This is going to be the first order of business when the Senate comes back. They're not starting from scratch, and I think that that was a big difference between now and 2017 in the House, and I think it's going to be a big difference between the Senate and the House. The Senate's going to pick up what the House sent over. They're going to make their tweaks. They're going to have their hearings, their markups, but they don't want to dwell on this. They know they have to pass it, and holding it until mid to late July doesn't get easier.
See, he makes it sound so simple. I think some of them do like holding us hostage on this stuff. Alex Conan, it's great to see you. Let's stay in touch as we get closer to the 4th of July. Happy Memorial Day.
Same deal.
Firehouse Strategies as we prepare to assemble our political panel. Rick Davis and Jeannie Shanzano are on the way in. We'll play this to the panel coming up here. The bill passed the House. What happens next could get interesting. I'm Joe Matthew in Washington. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got some dip buyers coming back into the market despite lingering fiscal worries. S&P right now higher by 9. That is a gain of about 0.2%. Cautious comeback for the equity market. The Dow up 58, up 0.1%. NASDAQ up 114, up 0.6%. And the Russell 2000 index of small cap shares now little changed on the day. The 10-year with a focus on Washington, 4.54%. The 2-year, 3.98%. The 30-year, 5.06%. Gold now at $33.04 the ounce, down 0.3%. West Texas Intermediate crude down 0.8%, 61.07 a barrel. Bitcoin at $111,000, up 2.9%, a record today for Bitcoin. Weekly jobless claims are down, even as economic uncertainty rattles Wall Street and Main Street. And with more, here's Bloomberg's Vinny Del Giudice.
The Labor Department says initial jobless claims hit a 4-week low, 227,000. The data suggests businesses are comfortable with staffing levels despite increased tariffs and the impact of federal government budget cuts. The upbeat report covers the Labor Department survey week for its monthly employment report. Just the same, universities and businesses that have lost federal funding are cutting jobs, as are major firms like Amazon and Nike. Vinny Del Giudice, Bloomberg Radio.
And speaking of jobs, sources tell Bloomberg that Walmart is cutting corporate staff in the company's headquarters in Bentonville, Arkansas, and other offices. Many of those said to be tech jobs. Walmart shares little changed, up by about 0.1%. Urban Outfitters, the retailer after earnings, surging now by 22.5%. Ralph Lauren after earnings up 0.6%. BJ's Wholesale Club Holdings down 1.3%. Rival Costco reports a week from today. Costco down by 0.3%. Recapping stocks higher. S&P up 8, now up 0.1%. The 10-year 4.55%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie Pellet, watching Wall Street for us every day here on Balance of Power. Thank you for joining us on the Thursday edition. You made it to the threshold of Friday. Yeah, it's Little Friday here in Washington. We still have one more. Everybody said the same thing when they showed up this morning. It's only Thursday? That may have something to do with a 7 a.m. vote today in the House, so 1 o'clock in the morning, 21-hour-long Rules Committee hearing. They did finish it, by the way. Not to mention the 10 o'clock at night thing they did in the Budget Committee. It's been interesting times here in Washington, and they're pushing the clock still on getting the bill, now that it's passed the House, through the Senate. And in fact, well, back through the House again once these two versions come together and on the president's desk by the 4th of July. We'll see about that. An aggressive timeline, we can all admit. Alex Conant just told us it was perfectly realistic. But some things are going to have to take place between now and then. And if you ask Chip Roy, who, by the way, voted yes for this, member of the Freedom Caucus, pushed for changes and was a holdout to the last minute, specifically when it came to the Medicaid cuts. He's hoping that the Senate finishes the job. He just came out with a statement a couple of moments ago. He says we must reduce deficits much further, even as we continue to work to fully repeal the IRA's unreliable energy subsidies and reduce the damage done by Obamacare's Medicaid expansion. He talks about reducing provider taxes to end the unnecessary inflation of costs in healthcare. Capping the statement, I stand ready to work with my colleagues in the Senate to continue to get this bill right before sending it to the president's desk. It's our first chance to play it to the panel. Rick Davis and Jeannie Shanzano are with us. Of course, Bloomberg Politics contributors. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. So, Rick, they got it done. And a lot of questions now about whether Chip Roy's wishes will be fulfilled. You spent a lot of years in the Senate. They're not too concerned about what the House thinks right now, apparently. What changes are coming?
Yeah, if anything, I think the Senate's been uber respectful of this House process. We know that John Thune wanted a different process. He wanted to cut these bills up into separate pieces and pass them independently. But, you know, he's going to get what he's going to get. And it's highly likely that the Senate will enact its will on this bill, whether it's a full swap out where the Senate takes up the House bill and then puts an amendment in that swaps out it entirely for a Senate version, or whether they just amend it so heavily that guys like Chip Roy, who are like dependent on the Senate to change the bill, he's going to be right. They are going to change this bill. But it'll be interesting after they've changed it, which will be in contrast with everything Chip Roy's been trying to accomplish. Less spending cuts, as much spending as there is. You know, these guys are going to walk the plank again. I mean, at some point, someone's going to scratch their head and say, "Methink they doth protest too much." A little Shakespeare today on the show. At some point, Chip Roy and his friends on the Freedom Caucus are going to be seen as total bullshit artists. I mean, you know, at some point, they got to either vote against this stuff or shut up.
Wow. Rick just laid it down, Jeannie. I never thought we'd have to bleep our own panel here. Are you, as a Democrat, this is a real question, are you hopeful that the Senate will make this more palatable, specifically when it comes to Medicaid?
Yeah, I mean, we can always dream, but the reality is that this bill is a this is a completely Republican bill. Chip Roy is barking up the wrong tree if he thinks that the Senate Republicans are going to make this more palatable for him. Democrats are certainly not holding out for that. The reality is this bill is a crime if you think about the issue of the debt and the deficit and what we are doing to our children. It is a crime if you think about what we are doing to the poorest people in this country. It is a crime if you think about what we are doing to issues like healthcare. So this is all around a Republican bill. They are going to have to own it. And this is why Hakeem Jeffries said last night, this is what we will be talking about. This is what Democrats will be talking about going into 26. And this is why Republicans are going to be running away from it very, very quickly.
Well, so do you doubt the timeline here, Jeannie? Because you've got the debt ceiling hanging over everybody's head when this comes back to the House.
You know, I don't doubt the timeline. I think, you know, look, January 4th is possible. Is it going to happen? Hard to say. On the debt ceiling, you already have people like Rand Paul and Ron Johnson saying they never wanted these tied together. So, you know, who knows what happens there? Even Rick Scott said he is not particularly pleased with that. John Thune, just like Mike Johnson, can't afford to lose too many of these folks. So it's going to be tough for John Thune. But the reality is, in the end, they are going to get something through and they're going to jam the House. And if history is any guide, the House will end up eating it. But the problem is all those people who have been barking about not wanting what's in this bill because their jobs, their seats are on the line, are probably going to lose those seats anyways. So they probably should have, if they really are very, very committed, done what Tom Massey did, which is stick to their strong beliefs. But, you know, we only had 2 go there and 1 vote present.
What are they saying in New York about Andrew Garbarino? Jeannie, this is amazing to me. He spent such a great deal of time helping to work out the increase in the SALT cap, to advocate for clean energy tax credits, and he slept through the vote?
Hey, listen, they've been working long and hard. No, I mean, you know, I don't think it's ever a good look if you're on any job and you are sleeping through the most important part of it. I never sleep through this show, Joe Matthew. I'm always awake. So I think there's a little bit of a lesson there.
Wow, interesting. Rick, I just mentioned the debt ceiling, and this is obviously going to become a much more urgent matter when we get a real X date. Does the debt limit actually help this get through the House when it comes back around again, if indeed there are massive changes?
Sure. It gives the president a great reason to even apply more pressure than he's already applied to the House. And by the way, I mean, it's good for the Senate, too. I mean, it's not a snap that John Thune, the majority leader in the Senate, is going to smoothly get this bill through. There are dissenters, you know, in this process. Rand Paul, for one, cannot be counted upon to vote for a big fat reconciliation bill that raises the deficit, you know, by over $3.5 trillion. So he needs all the pressure he can get to make the deadlines that I agree with Jeannie. I think these are real deadlines, right? The president wants that bill before they get out for August recess. And so I have no doubt that the Senate's going to try and exert its will as quick as it can. But having the debt limit on there adds extra pressure both at the Senate, but also it solves a big problem for everybody, you know, when it comes down the pike on the final passage.
I want to ask you about the president's plans for tonight, because there are a lot of questions about conflict of interest, and these are suggestions that the White House has already knocked down. But this is the big private dinner with the president for the crypto investors who bought Trump coin. 200 wealthy crypto bros, as we read, at the president's Trump National Golf Club just outside the nation's capital. You ever play a couple rounds there, James? It's out by Dulles Airport. He will be the star guest at what the official website describes as the most exclusive invitation in the world. There'll be a VIP reception as well with the 25 biggest buyers, investors of the Trump coin. Press Secretary Caroline Leavitt was asked about it in the briefing room recently. Here's what she said.
The president is abiding by all conflict of interest laws. The president has been incredibly transparent with his own personal financial obligations throughout the years. The president is a successful businessman, and I think, frankly, it's one of the many reasons that people reelected him back to this office. Look, I can assure you the president acts with only the interests of the American public in mind, putting our country first and doing what's best for our country, full stop. That's his intention, and that's what he's focused on.
What do you think, Jeannie? Is that an appropriate answer? Because there are a lot of questions, and you can read about it in our big take today, about the extent to which the Trump family is being enriched in this administration, in this second term, knowing that Republicans spent the last 4 years talking about how the Biden family was doing the same thing.
Yeah, you know, I was just reflecting back. Remember long, long ago, Joe, when we spent a lot of time talking about Bill Clinton having people sleep in the Lincoln bedroom, and that was, you know, the biggest scandal. And then you look at what is happening now. Within a 24-hour period, we have the Defense Department accepting a $400 million jet from Qatar. We have a president going to a private dinner where they still won't tell us who is attending. But in order to attend, you had to pay. And the average payment was over $1 million. I think 400 million spent overall, some of them at 10 million, to buy into the president and his family's meme coin. You know, you want to talk about pay to play. This is it. And just one of the people that is being rumored to be appearing tonight, and who knows, because it's crypto, is Justin's son, who was being investigated not that long ago by the SEC when he invested $30 million in Donald Trump's campaign. That investigation has stopped or been put on freeze. And they're saying about 19 of these top 25 folks may be from foreign countries and foreign investors. This is very damaging for the United States, that a president can be bought or paid for in order to gain access. So what happened to drain the swamp, I'm not sure.
The Dem reaction has been pretty severe. Chris Murphy, the senator from Connecticut, talked about the Trump coin scam, the most brazenly corrupt thing a president has ever done. His colleague Richard Blumenthal called it an unprecedented pay-to-play scheme. Are they overdoing it here, Rick? Does this make you uncomfortable? Is this just the new way of doing business in Washington?
You know, it's kind of the old way of doing business in Washington. It's just, you know, death by 1,000 cuts. Look, I mean, it's not an excuse, but Donald Trump campaigned saying he was going to do all these things, right? I mean, like a lot of these different business ventures were already in place. His partner, Bill Zanker, who's mentioned in this Bloomberg article, it's a fascinating read because they've got probably half a dozen business ventures that are alive and well today. And includes these meme coins. And so he said repeatedly in his first term that basically conflict of interest doesn't apply to the president of the United States. And so you know, voters were forewarned. And so let the chips fall, right? I mean, Donald Trump's going to be Donald Trump. Voters are going to take a look at this over the next 4 years and say, were Republicans responsible or were they not? And that'll be the judge of who the next president's going to be.
Rick Davis and Jeannie Shanzano make up our panel, and they'll be back with a lot more in our second hour here. Bloomberg Politics contributors on the case as the bill passes the House, and we head for this event tonight with Donald Trump. We're going to be joined in our second hour by Chuck Edwards, the Republican from North Carolina's 11th district, is going to be with us. We're also going to be talking with the U.S. Ambassador to NATO, Matthew Whitaker, as part of our conversation here in Washington. Kaylee Lyons will join the conversation, and so will a global television audience. If you're with us right now, thanks for joining on Bloomberg Radio, satellite radio channel 121, on YouTube, where you can always find us by searching Bloomberg Business News Live, and now on Bloomberg Originals You can't hide from it here in Washington. We've got a lot more to talk about, so stay with us here on the fastest show in politics. I'm Joe Matthew in the nation's capital, and this is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Now it's on to the Senate. Welcome to the Thursday edition, just hours after the president's big, beautiful bill passed the House in a squeaker, with big questions now about what happens to Medicaid, to the SALT cap. I'm Joe Matthew alongside Kaylee Lines in Washington, and thank you for being with us here on Balance of Power. The Speaker, Kaylee, says the bill will be on the president's desk by July 4th. another tight deadline to follow.
Yeah, and there's still a lot of work that needs to be done before then, because
That's
yes, the House managed to pass this version of the bill, but it now goes to the Senate that may want to see some changes, not just on the issues you mentioned around Medicaid, potentially around SALT as well, but also on the escalated rollback of clean energy subsidies from the Inflation Reduction Act. It's going to be an uphill climb to get this thing through the Senate as well, and the House could be looking at a very different package that comes back to it whenever this summer.
Whenever that happens, presumably before the 4th of July. But of course, we've got the debt ceiling, the debt limit to be addressed in this legislation, which could create a bit of urgency when it comes back to the House. A lot of questions, though, that we'll be talking with Chuck Edwards about. The Republican from North Carolina will give us his view in just a moment. I thought everybody was leaving town. I guess some are still here.
Yeah, maybe his flight's a little later.
Maybe.
He's kind to give us some time on the Thursday before Memorial Day. And that's not all we have coming up this hour. We'll also be joined by the ambassador to NATO, the U.S. ambassador. That is Ambassador Whitaker will be with us as well. So we have a lot to get to, from domestic to geopolitics. But we begin, as always, with a check on the markets. And Charlie Pellet has a look at that from New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. That cautious comeback, losing steam. Moments ago, we had the S&P 500 index turning lower right now, looking at a gain of just half a point on the S&P 500 index. The Dow up 8, also little changed. The NASDAQ up 87 now, up by about 0.5%. The 10-year, 4.55%, with the 2-year currently yielding 3.99%, and the 30-year, 5.06%. Spot gold down $15 the ounce, 3,300 even right now on the precious metal, down 0.5%. West Texas Intermediate crude oil down 0.6%, 61.18 a barrel on WTI. Bitcoin, big story today, yet another record with a $111,000 handle on Bitcoin, up now by 2.7%. Right now, the S&P lower by a point, little change there. Investors in clean power stocks running for the exits after a massive tax and spending bill that would gut former President Biden's landmark climate law narrowly passed the House of Representatives. That bill now moves to the Senate, but shares of Sunrun, America's biggest rooftop solar company, down 40%. Solar Edge right now down 25%, and Enphase Energy down by 19%. The Justice Department probing whether Google violated antitrust law with an agreement to use the AI technology of Character AI, a popular chatbot maker. Google trading higher today. Google up now by 2%. We are awaiting the start of trading for Hinge Health, HNGE on the ticker. I'll update you on that once we get our first trades. Recapping, S&P down 3 now. Trump there of 0.1%. Balance of power continues. What a day in Washington. Back we go once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, you spoke it into existence. Hinge Health just opening at $39.25 a share. That is well above the IPO price of $32 a share. So a bit of a bid as trading begins here. And as Charlie says, he'll, of course, keep you on top of that as we continue to check in with him on these markets and newly public companies. But, of course, we also are focused on politics at this hour here on Balance of Power. And if you were with us on this show yesterday at this time, we weren't quite sure if the House Speaker, Mike Johnson, was going to be able to pull this whole thing off, as he was dealing with competing factions in his conference, having made the SALT caucus happy with a lift to the cap of $40,000, angering conservatives in the process, having to offer them in exchange an acceleration in the implementation of stricter work requirements around Medicaid and in the rollback of clean energy subsidies from the Inflation Reduction Act. There was also a visit to the White House with President Trump in there as well to convince some of the holdouts, but the job was done. The bill passed narrowly, 215 to 214. And the Speaker was sounding pretty happy about it this morning.
We look forward to the Senate's timely consideration of this once-in-a-generation legislation, which stand ready to continue our work together to deliver on the one big, beautiful bill, as President Trump named it himself. We're going to send that to his desk. We're going to get it there by Independence Day on July 4th, and we are going to celebrate a new golden age in America.
July 4th, an aggressive timeline? Maybe not. Let's talk about it with Chuck Edwards, the Republican congressman from North Carolina's 11th district, is with us. Congressman, it's good to see you still in Washington with a lot of questions about what comes next. I know this is a day that Republicans are feeling pretty great about, but it's going to go through the grinder in the Senate. And I wonder if you're prepared for the changes that will come back. Are we going to have to go through this all over again?
Well, you're right. It is a great day for America. And what we saw take place at about 7:10 a.m. this morning was the culmination of many months of grueling work to put the American agenda back on the plate and turn this country around. It's an exciting day.
Well, when we consider what actually happened today, everything embedded in this legislation, Congressman, obviously the House was having to work under different parameters than the Senate will. You know this, having a seat on the Budget Committee. The Senate has more wiggle room to extend tax cuts perhaps even further as they use the current policy baseline. Are you expecting that the end result of this bill, once it's gone through both chambers, is going to be a bigger price tag than what you and your colleagues just passed?
I believe that we're at a point right now where Americans are demanding more fiscal responsibility, and I think we're going to see that out of the Senate's product. I know that Americans are desperate to not see taxes go up. I think we're going to see that come out of the Senate product. I know that Americans are demanding stricter border control. We're going to see that come out of the Senate product. I believe that the bill that we see back out of the Senate is going to very closely mirror what we will send them later today.
Your colleague from Kentucky, Tom Massey, who was, of course, a no and had been through the duration, said this bill is a debt bomb ticking. Congress can do funny math if it wants, but bond investors don't. Congressman, is he wrong about the money that's being added to the debt and deficit?
Well, there's no question. We have curbed our thirst for spending by about $1.5 trillion. There's plenty more work to do, but I think that we have to take a moment and celebrate what we were able to accomplish at this momentous time. And we'll come back to work, and once we begin to see the results of this bill and the economy grow by not allowing taxes to go up and putting that money back into the economy, we'll be able to take another more stringent look at the spending bills of the future. But we have curbed the thirst for spending in a way that you've not seen up here in D.C. for a while.
Well, as you talk about the potential economic benefits of this legislation, Congressman, are they in no way, in your mind, offset by existing tariff policy or the risk of higher tariffs that still could come in the future?
Well, what we're seeing out of tariffs right now is budget surpluses. We're seeing income that has not been yet placed on the balance sheet of the United States. That is not fully baked in. I think what we're also going to see as President Trump continues to negotiate with these tariffs would be even a stronger economy with more investment here in the U.S. and more jobs.
That said, Congressman, the CBO says this bill will boost the incomes of the richest 10% of Americans while lowering the incomes of the lowest 10% of Americans. How does that resonate in your district?
Well, CBO has not had a very good record in being right. The reality is, right now, the tax rate for the highest earners in America is 37%. And when this bill comes into law, the highest tax rate will be 37%. The left is not bothering to tell you that. They're using the old-fashioned talking point. That
is the CBO the left?
The CBO is just inefficient. I'm not going to say that they're partisan or not, but when you go back and look at their record, they do not have a history of being accurate. We believe that the economy is going to grow at a far quicker rate than what they've got baked in right now, just as it did under Trump 45 when the Tax Cuts and Jobs Act was initially put into law.
Congressman, considering your district in North Carolina, I also want to ask you, as we approach the beginning of hurricane season here, knowing you've called for reforms to FEMA, about the warnings internally that FEMA has delivered about being unprepared for this hurricane season, in which there's now suggestions we could have up to 19 named storms. Are you concerned about the impact potentially on North Carolina, about a lack of preparedness as we enter these next months?
Well, I certainly believe that Western North Carolina has seen its worst hurricane in many decades. I'm more concerned about rebuilding from last year's hurricane. There's no question FEMA needs to be reformed. It failed North Carolina in so many different ways. I'm happy to have had the opportunity to suggest to the president some reforms that should be put into place now to help whoever the victims of the next storm might be.
A lot of people remember your response to Hurricane Helene and your attempt to debunk some of the myths that surrounded the response, going so far as having to write that Hurricane Helene was not geoengineered by the government to seize and access lithium deposits in Chimney Rock. This was back in October of 2024. Congressman, I'm glad that you brought this up. What else does Asheville and the Hill Towns need at this point to rebuild?
The biggest thing that we need right now is to continue to dismantle the bureaucracy in Washington, D.C. I'm really happy that President Trump has been to Western North Carolina on a couple of occasions. I'm excited that he assigned me to a special task force to offer recommendations on how to accelerate our recovery. But there's much, much more that we have to get out of the way in Washington, D.C. We have a substantial funding package that I authored back in December, and now there's hundreds of millions of dollars in the hands of federal agencies, but we're having a really tough time getting it into the hands of the people that need it most. That's the number one thing that we need in Western North Carolina right now.
All right, representing Western North Carolina, specifically North Carolina's 11th Congressional District, Republican Congressman Chuck Edwards joining us live from Capitol Hill here on Bloomberg TV and radio. We appreciate your time, and we want to turn now to our political panel as we continue to assess the legislation that the House was able to narrowly pass early this morning, and turn to Rick Davis, partner at Stone Court Capital, Bloomberg Politics contributor and Republican strategist, alongside fellow Bloomberg Politics contributor Jeannie Shanzano, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. We just heard from the congressman there, Jeannie, sounding pretty confident that he thinks the Senate isn't going to make many changes to what he and his colleagues were able to get across the House floor this morning. Is that also your working assumption?
It is not. I give him a lot of credit for being so optimistic. I'm sure he's on a high right now that they passed this bill because, of course, that wasn't certain. But, you know, I just go back to what Lindsey Graham rather said when he said that, you know, you had your turn of the House and now it's our turn. And what we're hearing out of the senators is that they are going to be moving this bill in a direction that is not going to be beloved by members of the House Freedom Caucus, in particular as it pertains to budget and spending. I mean, the reality is this bill adds an enormous amount to the deficit, and that's why those who are fiscally conservative and who are consistent in that, like Massey, voted against it. It is will blow up the deficit, and that's something our kids and our grandkids will have to pay for or reconcile with.
We heard from Hakeem Jeffries this morning, Rick. He says Democrats just won the midterms. And of course, he's looking specifically at Medicaid cuts, along with some other items here. Can the Senate change that course, or is he right?
I think the Senate can soften that up a little bit. There's no question that there are senators very concerned about the Medicaid cuts put in by the House of Representatives and are likely to change some of those provisions. But the reality is you just can't get the addition to add to be right on this unless you find spending cuts that can defray some of these other spending items. And so the Senate has a tough job because it's not only the math, but it's also, as you point out, the messaging on this. You know, what is going to be the Republican talking point? We just heard Congressman Edwards talk about tax cuts, tax cuts, tax cuts. And the irony is that these are tax cuts that everybody enjoys today. So it's really the extension of those tax cuts with some additions like no tax on tips and some other things that the president campaigned on. So I think we've heard the Republican talking points, and I think we now know what the Democratic tax lines are going to be relative to Medicaid. And I think we're already seeing the midterm play out in real time right now. So game on. Let's see how this all shapes up. But it's awful hard to convince the American public voters that they're getting something special when they look at their tax bill. It's going to be the same as it was last year.
Well, Rick, there's also the consideration of the parliamentarian in the Senate and whether they will rule that everything that was in the House bill is actually acceptable under the rules of what can actually be in a budget reconciliation package. Knowing that the Senate just today voted to block California's ban on gasoline-powered cars starting in 2035, despite a ruling from the parliamentarian that the Senate did not actually have the authority through the Congressional Review Act to overturn that EPA waiver that was, of course, done during the Biden administration. Does that suggest to you that they would be willing to overlook the rulings of the parliamentarian in this process or in any in the future?
I think it's a little bit of a one-off, and every senator I've talked to indicates that the Byrd rule, this idea that reconciliation bills have to pass certain scrutiny and it must be fiscal issues involved and not policy issues, is, from what I can tell, still going to be a major hurdle for a lot of the things that are in the House bill and will simply be dropped from the bill based on the parliamentarian's ruling. Now, what's replacing them is the big question mark. And the House bill also didn't have a lot of detail in the reconciliation. It had huge chunks of money, hundreds of millions of dollars for things like border control, but they did not articulate what the border control would be, whether it's, just general policing of the border or building a fence. There's typically in budget bills, you have a lot of detail. I think we'll see more detail coming out of the Senate on how they want to see all that administration spending.
Jeannie, you just heard our conversation with Chuck Edwards, the congressman from North Carolina. He likened the CBO to the left, suggesting that there may be political motivations here, and we've talked to a lot of Republican lawmakers who simply don't think that the Congressional Budget Office, billed as nonpartisan, is trustworthy. They're looking for dynamic scoring. They don't believe the numbers that they're hearing from the CBO when it comes to increasing the debt and deficit. How do we get around this? And how do we find an objective arbiter when it comes to legislation?
The CBO is an objective arbiter. The problem is whether it is the Democrats or Republicans, any pronouncement by the CBO is if it's in violation or if it goes against what they want and what they hope, they then describe it as partisan, describe it as untrustworthy. And the reality is the CBO is made up of very, very good people, smart people, economists, other people who know what they are doing, and they are not driven by partisan means. So I think we have to, listen to some of those complaints with a bit of, just understanding that when the CBO says something they don't like, that's always been the response.
Jeannie Shanzano and Rick Davis will be back a little bit later on this hour with a breaking headline on the terminal now. President Trump will attend the G7 meeting in Canada. That's according to Caroline Leavitt, the press secretary, just now briefing reporters at the White House. We'll have a lot more ahead, including our conversation with the U.S. ambassador to NATO. Straight ahead here on Balance of Power, Bloomberg TV and Radio.
7:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a number of developing stories. The White House says President Trump will attend the G7 meeting in Canada. The Celtics sale has got a $1 billion investment from Aditya Mittal. That, according to Sportico. Connected TV advertising platform MNTN shares mountain up 43% after the company and some of its shareholders raised $187 million in an IPO. And Hinge Health now up and trading. Hinge shares, they're advancing by 18%. Wall Street, however, struggling to recover today after that Treasury sell-off yesterday. Stocks making small moves despite a rebound in bonds and the dollar rising. Following the worst equity round in a month, the S&P 500 wavering right now higher by 9. That is a gain of about 0.2%. We've got the S&P now at 5854. Dow Industrials up 76, up by about 0.2%. NASDAQ up 105 for the NASDAQ Composite Index, up now by 0.6%. The Bloomberg Mag 7 Index, though, surging 1.1%. Again, keeping that in context, the S&P by comparison up by about 0.2%. 10-year at 4.54%, the 2-year 3.99%, and the 30-year 5.06%. Spot gold down $15 the ounce, $32.99 for an ounce of the precious metal, down 0.5%. A retreat for crude down 0.7%, $61.14 a barrel. And Bitcoin, a substantial move there, closing in on $112,000 right now, $111,750 on Bitcoin. That is an advance right now of just about 3.2%. Sources tell Bloomberg Walmart is cutting corporate staff at the company's headquarters in Bentonville, Arkansas, and other offices as the world's largest retailer looks to trim costs and contends with economic volatility. Those sources say the company is eliminating some jobs in its global tech team. Walmart right now unchanged on the day at 96.45. Urban Outfitters shares surging 22.3% at 72.95. Urban Outfitters higher after the apparel retailer reported net sales for the first quarter that beat the average analyst estimate. So again, recapping here, we're looking at a record for Bitcoin. We've got the 10-year currently yielding 4.54%. S&P up 12, up 0.2%. Balance of Power continues now.
All right, Charlie Pellet in New York, thank you so much. This is Balance of Power, live on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew in Washington, where, of course, much of the Capitol has been focused on Capitol Hill today for what happened in the House, the passage of the budget reconciliation plan, the so-called One Big Beautiful Bill, 215 to 214. It now goes to the U.S. Senate. But on the floor of the U.S. Senate today, the Senate Majority Leader, John Thune, was actually focused on something else, and that is the ongoing war between Russia and Ukraine and the pressure that the U.S., the Senate included, is willing to put on Vladimir Putin to agree to a ceasefire, including a bill, of course, drafted by Senator Lindsey Graham that threatens further sanctions on Russia if there is not progress made on that front soon. Here is Senator Thune on the floor earlier.
The Senate stands ready to act. Thanks to the dogged work of Senator Graham, we have bipartisan legislation co-sponsored by 80 of my colleagues to impose additional economic sanctions and tariffs on Russia. If Russia is not willing to engage in serious diplomacy, the Senate will work with the Trump administration to consider additional sanctions to force Putin to start negotiating.
This is where we start our conversation with Matthew Whitaker, the U.S. Ambassador to NATO. Joins us live now from the North Lawn of the White House. Mr. Ambassador, welcome to Bloomberg TV and radio. It's great to have you. Are you concerned that Capitol Hill, that the legislature could complicate matters and, in fact, interfere with peace talks between Russia and Ukraine?
Yeah, well, obviously, first of all, it's good to be with you. And I think the peace talks, while ongoing, I think we're struck a small blow with Putin sending a low-level delegation last week to Turkey, and where we find ourselves. I've been reading news reports this morning suggesting that President Trump continues to be frustrated, and obviously anything that happens up on Capitol Hill, will most likely be, as Senator Thune said, will be in concert with President Trump. So I fully expect that will be hand in glove and help hopefully advance the peace process ultimately.
Well, Mr. Ambassador, you referenced news reports. I would love your take on the news that was reported in the Wall Street Journal that President Trump told European leaders in a call earlier this week that Putin is not ready to end the war because he thinks he's winning. Is that a sentiment he shared with you? Have you shared that with our NATO allies?
Yeah, I have not, but I think you can just look at, we've said often that you don't listen to the words of President Putin and President Zelensky. You listen to their actions. And right now, Putin continues to fight the war in Ukraine, continues to send hundreds of drones almost on a daily basis against oftentimes civilian targets. So I think that, would suggest that President Putin doesn't want peace yet. And so obviously the United States has a lot of cards to play in this situation, but President Trump wants peace, and what I've talked to him about is this hot war in Europe should end, but it should end when both sides can agree to some ceasefire framework and some peace plan that makes sure it doesn't fire up again, because I think that's the biggest risk, is that we might end the near-term killing, but we want to end the long-term killing. We have 5,000 people every week that are dying on the battlefield, including civilians, and I think that's just a human tragedy that needs to stop.
Have you also talked to the president, Ambassador, about walking away? We've heard President Trump suggest this, as well as Secretary of State Marco Rubio. I think J.D. Vance, the vice president, has suggested this as well, that there will be at some point a line of diminishing returns where the U.S. will simply back off and leave this up to the parties who are directly involved.
Yeah, I think President Trump likes to keep all options on the table and keep as much negotiating space as possible. There are several things that he could do on really either side of the equation to try to end this war in an asymmetrical kind of way. But I think, President Trump is trying to find the right circumstances and the right situation to end the killing that I mentioned earlier. But at the same time, he does not have unlimited patience. And so at some point in time, as Secretary Rubio has said, we need to, address other critical issues, and we can't spend all our time trying to mediate a war that neither side appears, but especially Russia appears to be unwilling to end.
I'd like to ask you about something else that Secretary Rubio has said recently, Mr. Ambassador, and that is by next month's NATO meeting, which is scheduled for late June, that members will have all agreed to hit a 5% defense spending target. How confident are you about that target being easily reached, and on what realistic time frame?
Yeah, well, right now, Secretary Rubio has said that timeline would be 10 years. Obviously, we're working with all of our allies to figure out what makes sense, but we need something that's different from what was the Wales Pledge from 11 years ago, where everyone agreed to 2% of GDP being spent on defense, and some of our allies are just getting to that, like, right now. And so we need to have clear stair steps to meet those goals, and at the same time, we need to make sure all of our allies understand that it's got, primarily be on hard defense capabilities according to the NATO warfighting plans that actually make the alliance stronger. But remember, as I mentioned before, President Trump wants peace, and deterrence and strength are the way to bring that peace to the continent. But for too long, the European allies have relied on the United States as the primary security provider in Europe, and they need to equalize. And that's where this pledge and this commitment that we're going to see out of The Hague really gets us to that point where they equalize, they share the burden with the United States of America, and the United States of America can address other very important security needs across the globe.
All that said, Ambassador, I go back to your testimony in your confirmation hearing, and I wonder if you see your primary goal, or if the president has told you your primary charge is to keep the peace in Europe, or to get NATO members to pay more on defense and reach that 5% goal.
Well, I don't see that as an either-or answer. For me, I see that we need our NATO allies to be strong. We need them to equalize with the United States of America. And at the same time, the strength will deter Russia and other adversaries from making a move on NATO territory, and therefore we will have peace. You cannot be weak and have peace. You will be taken advantage of by those that are stronger. And so the United States is a great ally and a great friend, and we're just making sure that all of our NATO allies, all 31 other allies, are strong as well with us.
All right, Mr. Ambassador, we appreciate you joining us here on Bloomberg TV and radio today. That's the U.S. Ambassador to NATO, Matthew Whitaker, joining us live from the North Lawn of the White House. And inside the White House, actually right now, inside the briefing room, the White House Press Secretary Caroline Leavitt is speaking to reporters, talking about another area of conflict, specifically the Middle East and Iran, saying that President Trump spoke to Israeli Prime Minister Benjamin Netanyahu today about talks with Iran, but about also something that happened here in Washington, D.C. last night, a shooting of a couple, two individuals who worked at the Israeli embassy as they were leaving the Capitol Jewish Museum. The assailant, according to police, who fatally shot them, chanting "Free Palestine" as he was taken into custody. And as there's bipartisan condemnation against this attack, what is being described as a terrorist attack and an anti-Semitic hate crime, we wanted to get the reaction from our political panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are still with us. Rick, as we consider the events of last night, knowing if they happened elsewhere in Gaza, for example, or in another area other than the nation's capital where other things have been taking place, I would imagine there would be a great deal more attention on it. But what is the implication here as we consider a White House that has been incredibly focused on combating anti-Semitism in this country?
Yeah, I think it's actually a message that it needs to be not just the White House, but all other institutions that we have in public and private sector. You know, Yaron Lachinsky and Sarah Milgram were beautiful young people just starting their lives together and struck down, political hate crime. There's no question in my mind what has motivated this. Just 4 blocks from the White House, or from the Capitol building itself, it has to be unacceptable to everybody, regardless of what their political views are, what party they're in, what views are about Gaza and Israel. This should be condemned at every level. And it really needs to be a moment where we spend time on it, because if we don't, we subscribe this to history that it'll probably happen again. So, I appreciate you bringing it up on the show, because I really think it's a moment in time that's important.
I'm glad you said their names, Rick. Yaron Lachinsky, Sarah Milgram were going to be married. They were set to be engaged this summer. Jeannie, what does it tell you when stories like this are emerging here on U.S. soil?
It is so distressing. What a heinous act. I was just learning more about Sarah, just 26 years old. She was a peace activist. She believed in reconciliation, coming to common understanding between the Israelis and the Palestinians, everything you would want in somebody seeking peace, and deeply committed to that. And just 26, for both of them to be gunned down. We've seen a shocking rise in anti-Semitism in the United States and around the world. And sadly, this unfortunately is not surprising. Anybody who is familiar with any Jewish organization in this country, I live in New York, we have a lot of them. They have extra security. Young Jewish people grow up knowing that they are a target. And of course, Sarah and her fiance, or soon-to-be fiance, they knew that as well. And so we do need a serious conversation about dealing with anti-Semitism that starts at the White House, as it has, but goes beyond that, to Rick's point. And let's not forget, this is coming not that long after the governor of Pennsylvania's house was firebombed. So this is a recurring, sad, and unfortunate situation in which 2 promising young people have been killed.
Well, and we also have to consider, with the lives lost here, Rick, the wider context, the backdrop with which this attack happened, which is, we've been talking for weeks now about what seems to be a distancing between the Trump administration and the Netanyahu government in Israel, and kind of a break in some areas of policy, not just on Iran, but also in Israel's current conduct in Gaza. What does this tragedy add, or how does it potentially alter the way in which these two are going to be interacting from here?
Well, there's no question it refocuses the public's attention and the media on the relationship between the U.S. and Israel, on issues related to anti-Semitism, on the Gulf region, and specifically what's happening in Gaza. And there's plenty to report on. This is a area that needs lots of attention. And if there is a legacy to Yaron and Sarah, it would be that we spend time thinking about how to cure some of these problems. Israel can't continue to live in a hostile environment. As Jeannie said, children here in the United States who are Jewish grow up knowing they're a target, but the entire state of Israel wakes up every morning thinking that somebody is there to kill them. That is just unacceptable in a world we live in today. So I think that it is a positive that we are now going to refocus, because of this heinous crime, on an area of the world that, if it is not fixed, will come back to haunt us in the future.
Well, it does make you wonder what the fallout would be if Israel did follow through on reports of an attack against Iran. Jeannie, we heard from Dan Bongino, the deputy FBI director, after this happened. He says early indicators are that this is an act of targeted violence. I think Rick referred to this as political violence. Isn't this a terror attack that happened in Washington, D.C.?
It is. You know, in the 19th, 20th century, they used to call it propaganda of the deed. And it's a violent action meant to influence and change public opinion. And if the reports that we heard but from what happened last night are to be believed, and we've seen some of the videos, this is part of that. So whether we call it, you know, an act of political violence, propaganda of the deed, or just an act of violence and terrorism, the result is it does have a very difficult, chilling effect, not to mention the people's lives lost. And so there really has to be an effort in this country and around the world to combat hate of all kinds, but anti-Semitism in this case. And we haven't done a good job on that. I'm at a university on college campuses. This is an enormous, enormous challenge. And part of what is driving this is what young people are seeing in the pictures that are coming over from Gaza and from that war. So we have a president who just came from the Middle East. He did not visit with Netanyahu or even stop in Israel. So we have to think very carefully about how we deal with the challenge that is the Middle East and the war that has gone on since October 7th.
Well, Jeannie, I'm glad you raised that you spend a lot of time on college campuses, where obviously we have seen a lot of protest activity, though not necessarily all of it violent. And this is what has come to issue in the actions from the Secretary of State, Marco Rubio, for example, in the attempt to revoke visas of those who were found to be anti-Semitic, or in the allegations of this administration sympathizing with terrorists. How does an attack like this, which obviously is very, very different, an actual crime and violence committed here versus words that are spoken at a protest or that kind of thing, what does this add to the complications around how free speech and anti-Semitism arguments are at play here?
Yeah, I'm so glad you raised that, Kaylee, because this is what makes it very difficult to distinguish between speech and violence. And we must, because we live in a country where we protect speech and we find any form of violence deplorable. And when these acts of violence happen, it gives rise to a lot of fear, understandably. And then there are pushes to do what the administration has been doing with some of these folks on Colombia and elsewhere. And we cannot allow that unless, of course, the law is broken, and any act of violence is a violation of the law.
We're glad we could have this conversation with Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. A great panel today. And thank you both for the insights. I'm Joe Matthew alongside Kaylee Lyons in Washington. This is Balance of Power. We have a few other matters that we want to get to today. But first, Wall Street. Let's see where the markets are at right now. And the Thursday trade with Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Indeed, higher across the board. The Dow, the S&P, and NASDAQ all back in the green. Do want to update you on a couple of IPOs, though, closely watched. We've got first day out for Hinge Health. The stock right now trading higher by 17.4%. And Ryan Reynolds Mountain Shares, MNTN, on the ticker there, rising 47% after its IPO. Stocks higher right now. S&P 500 index up 15, up 0.3%. The Dow up 118, up by about 0.3%. The NASDAQ Composite Index up 121, higher by 0.6%. The Russell 2000 Index up 0.2%. And a surge for the Bloomberg Mag 7 Index, rallying now by 1.2%. Keeping an eye on the 10-year at 4.54%, the 2-year 3.99%. 1%, with the 30-year 5.06%. Spot gold now down 0.6%, $32.94 the ounce. West Texas Intermediate crude down 1%, $60.98 a barrel. Bitcoin, what a story there, 111,770 now on Bitcoin, a record up 3.3%. In sports, briefly, the Celtics sale gets $1 billion investment from Aditya Mittal, that according to Sportico. Recapping stocks higher, S&P up 15, now up 0.3%, and balance of power continues right now. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet running us through the market action. Thank you so much. And interesting, especially as Charlie pointed out, to see what's happening in the bond market today. Yields moving a bit back lower after a massive spike at the long end yesterday amid concerns about fiscal policy in the U.S., knowing that the House did just this morning pass the one big beautiful bill, as they call it, that could add trillions of dollars to the deficit. And of course, feeds into concerns about fiscal responsibility in the aftermath of last week's downgrade of the U.S. Sovereign credit rating by Moody's. And while we've been characterizing the next big hurdle in this here on Balance of Power as being the U.S. Senate, which gets this bill next, interesting to see the reporting from our colleagues that you can find on the terminal and online today that actually the next big hurdle might just be the bond market.
Yeah, that's right. I think we've been on this beat appropriately this week. You've still got a 30-year above 5%, a 10-year above 4.5%, and this is pretty good stuff. Liz McCormick sharing the byline. Trump's next hurdle, indeed, the bond market hates this beautiful bill. She's with us now, Bloomberg chief correspondent, global macro markets. Liz, we've been trying to get you on the program since it came to Washington, so this must be an important day. It's great to have you with us here. The bond market has spoken. I guess I'm just curious to see what might come next from here. The Senate is supposed to soften the edges around some of these matters. Is this factored in?
Yeah, well, I think people are saying, show me, in the sense of no one's going to believe, it could get better with the Senate unless it really does, right? I think that's what the bond investors have gotten to, that, because a few people said kind of what's new. We kind of knew this projections of how this package would go. And, there was some massaging, like you said, the overnight deals, but I think, like you mentioned, the Moody's downgrade late on Friday brought it more top of mind, the fiscal, and then the budget going through. And I think a lot of it is investors are saying to me, we'll grow our way out of this, but we don't quite believe that, right? So if you do the numbers, and the people that have scored this smarter than me have said it's still going to increase the debt, in the long run, the deficit's going up. So I think the bond market is just kind of saying, kind of enough, we want to see something to change the outlook. And remember, there's a kind of a global bond sell-off going on, with this kind of fiscal top of mind in many countries. So it's adding momentum. So I think that's the thing. And people are just worried, like, what in the end is the final package? I don't think it'll get better. That's what they keep saying.
Well, so if the idea is that the final package could add to the deficit, all of it underscores the potential growing credibility problem for the United States and questions around the full faith and credit of the United States. Is there actually a chance, Liz, that there is a lack of demand for treasuries, that we actually see the bond market having difficulties with functioning properly that would require, say, intervention from the Federal Reserve as we've seen in the past?
Well, we're not there yet. I try to be calm and a voice of reason. And, like people were saying to me yesterday, it's the speed of the move. So far it's been, high, above 5%, but we're not kind of going 25 basis points a day, which would be scary. So I think for now, the Federal Reserve can take calm that the market is functioning. So that's not top of mind for them. But I do think, like people were saying, something else has to change. We need another catalyst. Let's say, the budget is what it is. We need something different to really see signs that the economy is slowing, right? There's several factors that weigh into bonds. And right now, the fiscal is top of mind. But if we start in higher rates, slow the economy, right? The housing market doesn't do as well with higher rates. So people are saying it might be a little self-reinforcing that if bond yields go so high, it may slow the economy, which may make you think, maybe the Fed's going to actually cut more than we think right now, which kind of is a pull down on yields. People still prefer to stay in the shorter end than the longer end, but I think that's what we want to see. Does the labor market ever crack? Not that people want that, and the administration doesn't want that, but that may slow the rise in yields overall.
All right, Liz McCormick, Bloomberg Chief Global Macro Markets Correspondent, here with us on Balance of Power with an eye on the bond market. Thank you so much. And we also have our eye on the wire, where a breaking news headline has just crossed from the New York Times as the U.S. has now halted Harvard's ability to enroll international students. This, according to a letter that was sent to the university by the Department of Homeland Security Secretary Kristi Noem. The copy of that letter was obtained by the New York Times, in which she writes that they are informing you, effective immediately, Harvard University Student and Exchange Visitor Program certification is revoked. This, of course, Joe, would mark a major escalation in an ongoing feud between the Trump administration and Harvard, now not just limiting it to the revoking of funding and federal grants, but actually halting their ability to enroll international students.
Yeah, this is amazing. They've got their hands on the letter. The New York Times quoting 3 people with knowledge of the negotiations as sources here. I suspect this is something we'll be hearing about from the White House, but indeed an escalation after the president threatened to pull all federal funding from Harvard as well.
Which, of course, is in the billions of dollars. Right. This is a story we'll continue to follow for you here on Balance of Power. But we also want to get back to what happened this morning on Capitol Hill, something else President Trump has been heavily involved in and cared a lot about, and that was the passage of the so-called One Big Beautiful Bill in the House of Representatives. This thing was a squeaker. Wasn't clear if Speaker Johnson was actually going to be able to get the votes.
By that, you mean one vote.
215 to 214.
Yeah.
Basically, first thing this morning after the House had to go all night getting everyone in line.
Wasn't that something? A lot of us woke up wondering when this was going to happen, and about 10 minutes later, they were pushing this to the floor. Timing was everything here, and clearly Speaker Johnson was ahead of the curve on this, as people were doubting whether this could even get to a vote this week. He was telling us it would happen by the end of the day today, and it sure did.
Met his self-imposed Memorial Day deadline.
Yeah.
So for more, we turn to Sarah Chamberlain, who's president and CEO of the Republican Main Street Partnership, which of course has many members that voted for this legislation today. Welcome back to Bloomberg TV and Radio. Sarah, obviously this was hard fought. It was not easy for the speaker to get this done this morning. Knowing that this is going to head to the Senate next and possibly change form, is he going to be able to pull it off a second time if this bill does not stay exactly as it is currently written?
Yes, he will. I mean, what he did was kind of a little bit of magic. It was fascinating to watch it because a lot of it happened, as we've talked about before, at the Main Street Townhouse. But yes, when it comes back from the Senate, he will have the votes again. And it would have been a little higher margin today, but unfortunately, at least one of
Somebody
ours
fell asleep, I heard.
Yeah, nobody woke
so
him
you
up.
can confirm that.
I can confirm. Yeah, unfortunately.
There were 2 who didn't make it. It was Schweiker didn't get there either.
Well, they were kind of there, but at least one of them was there but sleeping.
Honestly, if it had been me, I would have been dozing off. That's all I know.
I mean, they've been up. I mean, actually, some of them have been up 48 hours.
Absolutely.
I mean, they were exhausted.
A 21-hour-long Rules Committee hearing or something like that.
It's been a very long week.
Well, you get a gold star again for pointing us to what was going to happen. You told us this was going to happen. And I find it interesting that we spent so much time obsessing over moderates from New York and members of the Freedom Caucus, but it was actually the chair of the Republican Main Street Caucus, right, Dusty Johnson, who played a very pivotal and quiet role in making this work.
100%. I didn't realize you knew that. Yes. Yes. So Dusty is very close with the speaker. The speaker is he's very religious, and he really does believe that. I mean, he follows his religion. He does not lie to the members. He does not do door deals. He trusts Dusty 100%. So Dusty last night came over to the townhouse and said, listen, we think we have a deal. Here it is, but he needs to know what the Main Street Caucus feels. So reported back, Dusty went back, but Dusty, I mean, he's absolutely the right hand of the speaker. There's a couple others that are as well, but Dusty really is pivotal in
It says something about the moderates in this caucus, then.
It does. The Main Street Caucus is very powerful. Extremely powerful. They hate calling themselves the moderates. I know everybody does.
I get you in trouble.
Yeah, the Main Street conservatives.
All things being relative.
But they're very important. And of course, the SALT caucus was also part of Main Street. So they worked very hard in making sure they could cover the SALT. The woman who gets a lot of credit for that is Young Kim. She's not much covered in the media, but she fought really hard along with the New York members.
Okay, so when we consider the changes that the SALT caucus were able to secure, a lifting of the cap to $40,000, the changes that needed to be made to appease the hardcore fiscal conservatives because of that higher SALT cap and bringing forward work requirements around Medicaid and rollbacks to the Inflation Reduction Act. Of those things, or potentially, I guess we could add other things in there as well in terms of Medicaid changes and things like that, what are you expecting the Senate is going to be most eager to tweak here? Even if you think it can get back through the House, what are you anticipating is the end product from the upper chamber?
Actually, neither one of those. We think those will probably stay pretty close.
Okay.
It is the funding for solar and nuclear. That area got really cut. We think the Senate would probably put some money back into that. But the Medicaid, nobody is opposed to a 20-hour work week. And, that could be volunteering too. And it's only the healthy. I mean, children, I know the Democrats are running commercials like the little boy in a wheelchair. He's not going to lose his coverage. It is people who can go to work in some form of work at just 20 hours. Get them up, get them out of the house, get them, doing something.
Able-bodied men.
Able-bodied men and
Roy
women,
likes to
right.
Say. So if that gets tweaked in the Senate, is that unpalatable to, for instance, members of the Freedom Caucus, other conservative Republicans in the House? Or to your point, that's expected, and they're going to vote yes either way anyway?
I think it's expected. I don't think the Senate's going to tweak that. I think they're going to leave that. Now, it is very popular when polled out there. Most people are not against people doing something, working for their benefits. We're not cutting Medicaid. I mean, that's the big, everybody talks about that. It's not being cut. The illegals are being removed, and that's a big thing. And the other thing they're going to do with Medicaid, which we've talked about before, is they're going to keep reviewing the rolls and make sure people who are on the rolls should still be on the rolls. They haven't been cleaned up in years.
When we think about those changes to Medicaid, though, having been brought forward to December of 2026, very, very close to the midterms, knowing at the Main Street Partnership, you also are focused on retaining that majority, and in those swing districts in particular that make or break it. Are you even just a little bit worried about the electoral implications here?
No, not really, because if it's explained correctly, which I have an op-ed that does, it's going to be fine. It's very popular. The work requirement is actually extremely popular back in our districts, and in removing the illegals from the rolls are also very popular.
This is going to require some nuanced messaging, though, and
Exactly.
I suspect the Main Street Partnership will be deeply involved in that.
Right.
Or you have an op-ed up. Tell us where it is. This is something.
Not yet. We're getting ready to place it.
But you're crafting this now is the point.
We're crafting it now, so really it can be explained. This is really what this bill does, and stop hearing the rhetoric and kind of both sides. Here are the facts, and that's what we've done.
Well, of course, the bill can't do it yet until final passage and it's signed by President Trump.
Right.
We heard the speaker today say July 4th. We heard Russ Vought, the OMB director, also saying the president wants to see this on his desk by July 4th. Considering that Speaker Johnson was able to do this pre-Memorial Day recess, is that next holiday deadline now looking like a realistic possibility?
You have to ask Senator Thune on that one. I think probably. The president he gets what he wants. I mean, he really does get the members in line. So potentially, yes. I wasn't sure we'd get it done now, to be honest. Remember, I talked about it might go into June.
Yeah.
So we're certainly thrilled that it did. So hopefully Senator Thune will get it done on the Senate side.
Do we frame this relationship between the House and the Senate in the right way? Does the Senate respect the process in the House? Will they be sensitive to the five families, to the factions that we're talking about here on all of these issues? Or is the upper chamber going to fulfill its reputation of jamming the House and doing whatever it wants?
I think they understand. There's new leadership. They understand the importance of the House. The House is so close. The margins are right there. They understand if the bill doesn't come back similar to what was sent over, it won't pass again, and that then President Trump will not get his agenda.
Well, so while the Senate has this in hand and works on it for however many weeks in June, what's the next thing for the House to focus on in the meantime? We haven't seen a great deal of legislating so far this Congress.
I think they're going to sleep for a while, to be honest. I don't know. They're beginning to talk about what the next bill should be. But to be honest, all they've talked about is getting this done. So I really can't tell you if they're going to take a break and then they'll be back and start getting back to the
job. They should come back with some steam. They're going to be marching in parades and having town hall meetings, talking with the neighbors, right?
Right. And hopefully the people back home will be supporting what they did.
Well, come back and see us post-Memorial Day. I hope you have a great and long weekend. Sarah Chamberlain, thank you for pointing the way here. The President, CEO of the Republican Main Street Partnership, and a great source for us when it comes to all things Capitol Hill and in the House. I'm Joe Matthew alongside Kaylee Lyons. And we'll meet you back here at 5 o'clock on the late edition of Balance of Power with much more to discuss on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, this is Bloomberg Business Week Daily. And gotta say, yeah, it's a Thursday before a long holiday weekend, kind of the official start to the summer, but there's a lot going on. And we've got, a market rally actually at this hour, but it did feel like for most of the session, just kind of everything calming down, especially after yesterday, that Treasury sell-off that we saw that really shook markets around the globe. And then we also have a developing story. This coming from the New York Times, the U.S. halting Harvard's ability to enroll international students. It's a developing story. So we're on all of this, a lot coming up in the next 60 minutes.
You mentioned equities. I'm looking at what's happening with rates. We're seeing yields down across the curve. Still a little bit of tension in the bond market. Ira Jersey is going to be joining us in just a few minutes to break it all down, and really a view from Washington as well about what it means for the bill making its way through Congress.
Yeah, exactly. Like higher rates, it's a global thing. We're going to get into it. We're also going to get into what is the Bloomberg Big Take. It's also a most read story on the Bloomberg. Has to do with the president and his family and the money-making machine that is it. So we'll dig into that in just a moment.
Also, Freddie and Fannie shares flying high in today's session.